We'll go there. I can ask you after. Was it ground beef taco, chicken taco? What? Was it ground beef?
Sometimes I make turkey.
Hard shell?
Soft.
Soft shell. Put salsa, something like that. No salsa.
Sour cream.
Visualizing. I need info.
On tacos in particular.
All right, when we come back, is diplomacy a viable option to resolve the Iran war? We will get to that after this break. We're going to be speaking with the Council on Foreign Relations President and former U.S. Trade Representative Michael Froman.
Stylish.
Also, a reminder for you, you can get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app and you can listen anytime. We'll be right back.
Branches a mile, magnolia tree, past cemetery. Streetcars go by, moon in the sun, the light never dies. Oh, my friends of here, I'm so glad you are here. Chart patterns, moving averages, being in the now keeps you right on top. Chart patterns, moving averages, being in the now will keep you on top. Oh, my friends of beer, I'm so glad you're here. Woke up this morning with a coffee in my hand, happy as a bug on someone's land. I'm teaching how to trade stocks, be in the now and you'll be on top. Oh, my friends up here, I'm so glad you're here. Gotta go to work, clean up the desk, gonna have a little bit of rest. When I come back, I'm gonna trade the opening, and let's make some moolah. We're at the top, you see. Oh, my friends of beer,
President Trump announced a ceasefire in the Iran war about 36 hours ago, but things have only gotten more complicated since then. For more, we want to bring in Council on Foreign Relations President Michael Froman. He served as U.S. Trade Representative in the Obama administration. Good morning to you.
Morning.
You know, I think we should, it's not like I want to say we said this already, but, you know, everybody...
You're saying it again.
I think that things were so great yesterday. I was not so sure why that was the case. And the real question now is it one step forward, 2 steps back, 3 steps back?
God,
steps
shut
back?
up.
Where are we?
Well, first of all, I don't think it's unusual when these ceasefire agreements are announced that there is some bumpiness in the road and how they're implemented. As orders are given down the line, whether commanders in the field are being effectively sort of kept under the control of a central authority, etc. So it's not unusual for there to be at least some period of implementation delays in the system. I think the problem here, Andrew, is that there doesn't.
Why do they keep bringing these liberals on here?
Ceasefire or not?
Please.
Israel's actions in Lebanon.
God.
And did the U.S. accept? Did the president accept as a basis for negotiation?
Oh,
the
God.
plan from a
That's what I have to do most of the day now. It's like a whole totally different atmosphere, what it used to be like. You have to adjust to the idiots. So if you listened to their asses, you would have never bought the bottom of a double bottom on a 20-day, 1-hour time frame. Triple bottom with a wick. And we're way, just in this 20-day time period, we went from 192 to all the way to 234. Tech was way overbought. And you got great opportunities, I'm telling you. I'm more excited than I've ever been in this market. Ever. Just because this is what they want. They want the dip so they can get back in the trade. They've been calling resistance for 2 years. Finally, it's happening. I've been calling it also. I knew it was coming, telling people, don't hold, don't swing. This is a scalper's market right now. Until you find a bottom, and then we found 2 or 3 of them. We found 2 of them during the Trump drain syndrome period of life. I've never been good at trading energy. So, I trade Oxy once and Chevron once. And they were a buy. I mean, anytime you have a disruption in oil, see, we had a war on oil for 4 years under Biden. And gas got higher than what it is right now. So if you want to talk about war, we can talk about war. AMD set back up. I called this trade out yesterday. Double bottom. We had something right here. Well, it's not in this time frame. 5 minute, I think. Yeah. It's all been about snake, breakout, pullback, boom. So here's your snake, morning opening, tweezer bottom to a double top, pulls back down to a double bottom. Now this is important to watch. I drew this chart up yesterday, and I was telling how easy to trade this was. This is what you got to do. We had 3 black crows on the 5 minute. So if you're a rookie, trade the 5 minute. If you can't see what I see on a 1 minute, go to a 2 minute, go to a 3 minute, go to a 5 minute, until it's like a pair of glasses. Okay? There are different lenses that go on a glass, and you're going to find the right lens to bring you the best clarity where you can see. Same thing as charting. A lot of things that happen in charting happen in life. So you want to go to the clearest time frame where you get clarity. And then you expand from that. And when there's a downturn, you want to zoom out so you can see better. It's all about sight. Fear, you have to avoid. We have so much fear. People, I mean, they're just Trump deranged syndrome right now. It's almost laughable. Because what he's doing now, Democrats would have done 15 years ago, 20 years ago. And then they'd threat about doing it. But everything else about the borders and trying to get involved and trying to stop wars, instead of let them go on like we did under Biden and all them genocides, things were a lot worse. A lot of people died under Biden's watch. Especially our women in the United States with the open border crisis. So we had a snake breakout, pulled back, double bottom, and you got to watch them candles that come out of the snake, like this triple crow with a tweezer bottom. And then you got the same thing over here, another pullback with a higher low. This is my strategy. Snake breakout of the channel, pull back to a chart pattern, boom, to a double top, and you're out of the trade. Or you're out of the trade at a triple top. But these candles right here are strong, very strong. So you got the snake, tweezer bottom, double top out, hit 21 EMA. This is a 9 and 21 EMA cloud, pulled back, double bottom, dragonfly doji, and a hammer, very strong indicators that this was going to be a fake out with the wicks on the bottom. Boom, to double top. Read those candles. Learn how to read the candles. It'll make you 50 times better. I'll probably say almost 100% better. But you got to also read the patterns. That's the other 50%. And being in the now is number one. So I'm going to, well, I'm going to do, I don't want to erase this, so I'm going to save it. Because I want to do a video on this later. I ain't got time to do it right now. But this is a good illustration of what we saw yesterday on AMD. And AMD was a good trade yesterday. I'm dreaming of a white Christmas. I've had a Christmas sale in July. When I have some of my best sales in July when I run the Christmas special. Hello, my name's Washboardjim. I'm the thinking strategist behind the Sneaky Snake strategy, where I talk about chart patterns, moving averages, and being in the now. I've been trading for 22 years straight every day, and I've seen things a whole lot worse than what we're seeing now. I'm seeing a lot of propaganda, a lot of things that, a lot of news headlines that you can't believe, a lot of false information that's going on right now. Too much information, too much Trump deranged syndrome, and it's just a perfect recipe for buying the dip, because this market's in good shape in my opinion, and this is the way it is. I mean, I've seen days a whole lot worse than this. Been trading, I've seen times a whole lot worse than this. This is nothing. They're making a big deal out of this. We have a lot of Trump deranged syndrome out there, and I've just seen a lot of things a whole lot worse. So I'm very positive. I've called the bottom on the market. We've bounced up. We've had some pretty good little trades come in, some real good trades here in the last week. Some big gainers like from 360 to 3 grand in the SPX. So I'm going to keep scalping until we really start to get some kind of real good answers of what's going on in Iran. But I've seen days a whole lot worse. And I just want to make my point. There's a lot of rookies out there that think this is the worst time ever. It's not. I've seen days a whole lot worse. So I'm just saying, keep your chin up, play the dips, learn how to chart. I use chart patterns, moving averages, and being in the now. A lot of fear out there. A lot of people don't know how to trade in the market, and this market ain't down that much. It's not down that much at all compared to what we've seen in the past on worse events than what were taking place right now. So let's kind of look at this here real fast. I listen to Schwab. I get so sick of him. I mean, not Schwab, but CNBC. And I tried to be the devil's advocate. Now they're calling the bottom out, and they're questioning it. They've been questioning everything. We're supposed to be in a recession 3 years ago, 2 years ago, stagflation. It just, nothing they say has been right, from the interest rate cuts to anything else. So as they keep pounding in fear, that's the best time to buy in this market, is in fear. I mean, you got to be patient, and you got to look for the right setups. But, you know, I don't trade in fear. I trade what the charts read to me. And right now we're holding support on the SPY at 672.70. And I still got my low support channels in here just in case we hit a good spot. We hit that low support, I'm diving in this trade. We had a rising wedge breakout and consolidated, and we're consolidating real well after the great runs we've had. That's another thing you want to think about when you're looking at trades. We had a snake breakout, pulled back, inverse head and shoulders with a double bottom.
Retail investors to get involved in some of these funds. Retail investors tend to have less patience. They tend to be
shut up.
They tend to be maybe a little more.
I hate it when she tries to protect the retail trader. She's always been against. She even asked if it was against the law for us to be trading. God, I can't stand her anymore. Oh, they're uneducated retail traders. You listen to these idiots, you're going to be red. Okay, I got to leave because I'm a
market.
Shut up.
Certainly there has to be some liquidity restraints here. I think that the investors in these funds have to understand that.
Retail traders are
uneducated. I certainly
uneducated.
think that these funds do quite well. And for the right investors
They have little
who are looking
patience.
for a good return on a product that they understand like this, even if there's a little bit of a liquidity constraint.
They were saying this shit when we were at an all-time high and pumping new highs. Don't listen to the retail traders. And look where we are. I can't stand it when she talks like that. I believe retail traders are better traders than institutional traders. because they got one little boy telling them what to do. They can't think on their own.
Has to think about that. Certainly, they should think about those considerations going into the product.
You should think about shutting
There's
up.
a trade-off here. You're getting a good return for less liquidity, and so I think investors have to very much understand that going into these certain products. But that doesn't mean there isn't a place in the portfolio for that trade-off of liquidity versus a higher return.
Well, let me just ask you right now, if you were an investor, would you put more money, either more money or new money, into a Blue Owl fund at this point?
You'd be scalping, you
given that
idiots.
I think nobody's looking at this and saying it's worth 100 cents on the dollar.
Absolutely. I think, even if you look at the Blue Owl stock, I think it's extremely undervalued. The dividend
I'm not talking about the
on Blue Owl's
stock.
great, and
No.
certainly.
I'm not talking about whether you'd invest in the stock. I'm asking
Yes.
whether you'd invest in the funds.
Yes. The returns on the funds are still very good. I think that the performance is going to be strong. Certainly, the types of impairments you're seeing in public markets for OCIC and these BDC or OBDC and these publicly traded BDCs seem quite outsized to me compared to what you're really seeing in performance and returns. And I think even liquidity, probably the risk there is you have to understand it, but I think it's probably somewhat overstated as well, given you're going to see these investors being able to get their money back over some period of time.
Okay, Wilma, thank you. It is just past 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross working along with Joe Kernan and Becky Quick. We got a lot going on. President Trump posting on Truth Social late last night that the U.S. military forces will remain deployed in and around Iran until Tehran fully complies with the real agreement, he says. He said any breach would trigger a military response larger than anything ever seen before. On today's agenda, we're going to get new inflation numbers at 8:30 Eastern Time. Economists expecting a 3% rise in core PCE prices in February. That's versus last year, and a slightly lower pace than in January. We'll also get initial jobless claims and the final look at fourth quarter GDP. And Amazon CEO Andy Jassy just out with his annual letter to shareholders. Among the highlights, he's flagging that annual revenue run rate for the chip business is now over $20 billion and growing triple-digit percentages year over year. He said there's so much demand for Amazon chips that it's quite possible they'll sell racks of them to third parties in the future. And just to give you a quote from it, because it's sort of given their partners. So Amazon happens to be partners with NVIDIA. Seems to be also throwing down the gauntlet at his partner. He says, our chips business is on fire, changes the economics for AWS, and will be much larger than most think. Virtually all AI thus far has been done on NVIDIA chips, but a new shift has started. So watch this space.
All right, let's check the futures, which have been weak this morning, down 186 points now on the Dow. Let's get to Contessa Brewer with a look at this morning's pre-market movers. Hey, Contessa.
Hi there, Joe. Shares of Constellation Brands are moving lower this morning. As you can see, they're down by nearly 1%. The company had withdrawn its fiscal 2028 outlook. It's reporting slightly weaker demand. This is the maker of Modelo and Corona, pointing to what it called limited near-term visibility in the macroeconomic environment. And then, of course, there's this larger trend of declining alcohol consumption. Constellation's new CEO starts next week. What we've seen is those shares down more than 18% over the past 12 months. Big oil energy companies rebounding today after yesterday's big decline on that news about Iran's 2-week ceasefire with the U.S. That was the largest single-day drop in oil prices since 2020. Now you've got WTI and Brent climbing this morning, sitting just below $100 per barrel, and the ceasefire appears increasingly fragile as Israel has carried out strikes across Lebanon. And you can see that the energy companies are following suit as well. You've got Occidental up 1.5%. And so we'll keep an eye on those throughout the day here. Airline and cruise stocks in the red on those developments as well. You've got names like United down 1.33%. You've got Royal Caribbean down more than 1.5%. Norwegian is also off. These higher prices on oil affect these travel companies' stocks and their costs as well. Carnival was one of the best performing stocks in the S&P yesterday. It had gained 11%, but it's lower today by 1% here. That's the morning movers now, Joe.
Great. Okay. Thank you, Contessa.
Sure.
Fed officials last month still expected to lower interest rates this year despite uncertainty sparked by the Iran war. That's according to the latest release of Fed minutes. Most central bank members said that the war could drive the need for easier monetary policy if rising gas prices hit the labor market and consumer wallets. But officials were also concerned that fighting in the Middle East could result in sustained inflation that might call for an interest rate hike. The consensus anticipated one rate cut this year. That's unchanged from the last update we got back in December. When we return, Congress is back in session today. We will talk to Representative Brian Fitzpatrick. The Republican from Pennsylvania is pushing a bipartisan bill to fully fund the Department of Homeland Security and end the shutdown. Squawk Box will be right back.
Congress is back in session today. Yippee! One of the key items on the agenda is funding for the Department of Homeland Security. Our next guest has introduced a bipartisan bill that would fully fund DHS and add guardrails to immigrations and custom enforcement. Joining us now is Congressman Brian Fitzpatrick, Republican from Pennsylvania. Congressman, it's good to see you this morning.
Morning.
Bipartisan. What are we talking? How many Democrats are with you on this latest attempt?
Yeah, well, it was introduced one and one, and then we built it out from there. So Tom Swazi and I lead the bipartisan problem solvers in Congress. He and I authored it, and I think it's important to note that of all the proposals that have been put forth, both the Democrat bill that's being discharged at the desk, the bill that emerged from the Senate, the bill that passed the House that I voted for, none of them fully fund DHS, and none of them have a single ICE reform. And yet that was supposed to be this entire purpose of embarking on this mission, was to fully fund DHS and reform ICE. And 15 years in the FBI, Joe, everybody should be held to the same standard, everybody. And that includes ICE. And we've been in communication with them, both in DC and in our local field office in Philadelphia, to make sure that we're enacting reforms that they understand the importance of. And will also allow us to fully fund DHS, not fund everything but CBP and ICE, not, fund it for 60 or 90 days and not for the full year.
There have been other bills that Republicans said were addressing a lot of Democrats' concerns about ICE. Kristi Noem was gone. There were, other reforms that Democrats wanted. It never went far enough. The goalposts were moved. Whether it was in the Senate or the House. What makes you think this has enough for Democrats to sign on? They've been making political hay by not letting it go through. Like for example, judicial warrants. That can never be that cannot be practically done with immigration. It has to be administrative warrants. It'd be 100 years, and you'd have done 100 cases probably out of millions.
Well, no. So to answer your first question, our bill is the only bipartisan bill that has bipartisan co-sponsors. So that there's that. Nothing else that's been introduced has bipartisan support. On your question of warrants, you are right. There should be judicial warrants required for criminal arrests. But what a lot of people don't understand is that a lot of enforcement actions are civil and administrative in nature. There's no function in the law for a warrant. People think of warrants, they think of criminal arrests. A lot of people see the detention activities, the enforcement activities, and they think it's part of the criminal justice system. It is not. That's a hard thing for people to wrap their brains around. The immigration system is very unique in that regard. It creates a lot of confusion.
Brian, Democrats will insist on that and as a way not to do it. We had McCarthy on yesterday, former Speaker McCarthy. Yeah. He thinks you should, I guess, give in to Democrats and not fund, carve out ICE and fund everything else, and then do it through reconciliation. And I don't know. I live in I guess a utopian world, because that seems to be rewarding people that that close the government through extortion if they don't get what they want. But that seems to. He says that's the way it should go, unless they do it your way, which I don't have. Do you have high hopes that this is going to work, Congressman?
Well, we can always force it to the floor. We've done that multiple times on multiple pieces of legislation. We're not hesitating to do that here. But as far as the carve out, what I don't understand, why did they include CBP in that carve out?
No.
If their issue is addressing the tragedies in Minneapolis, which we need to address, the social contract of law enforcement has been frayed when it comes to immigration enforcement. Law enforcement is a social contract that requires mutual trust, mutual cooperation, mutual respect between the public and the agency. It's the only way it works, by the way. And we need to fix that. And ICE is fine fixing that. They're fine with body cameras. They're fine with independent investigations for law enforcement involved use of force situations. They're fine with consistent training requirements. They're fine with judicial warrants for criminal arrests. That's already the law, by the way. They're fine, having warrants for sensitive locations like churches and synagogues and mosques and hospitals and things like that. So most of the reforms they're fine with. And our Democrat colleagues, many of them are fine with them as well. But what I don't understand is why did they include CBP in the carve-out? CBP, our Customs and Border Protection, they keep our airports safe, alongside of our TSA agents, by the way. They're the ones that call balls and strikes of people coming into the country, who's a threat and who isn't, who's carrying dangerous items with them and who isn't. And yet our colleagues on the left included CBP in that carve-out, which I strongly objected to.
What does President Trump want? Because it looked for a while like that deal was going to get done until, you remember that Friday where Speaker Johnson was very animated and after, I think, Majority Leader Thune thought the deal was done with that unanimous 2 a.m. Senate agreement. And then it wasn't. Did the president, it looked like he was on board, then did he say don't do it? What's he saying now, you know?
Well, I think he just wants them to work it out. You know, he shouldn't need to get involved in every single little thing. You know, this is something, legislation that's been kicked around the two chambers. And, you know, I think he expects the leaders of the chambers to kind of work that out. And, you know, I think Speaker Johnson was caught by surprise. I was with him in the morning. So that bill passed the Senate to 2 o'clock, whatever, in the morning. I was with Speaker Johnson about 8 o'clock in the morning, a few hours after that, and he was completely caught by surprise. That should never happen on any matter, particularly matters like this.
So then, and I didn't think the GOP had a choice. I thought they had to do it because, right or wrong, the party that's in power is getting blamed for what's happening. But then here they didn't do it and they went on recess. So just kicked it down the can down the road.
I think it should be a simple rule for everybody. Vote to fund the government. You should never allow a government shutdown ever under any circumstance.
Too late. They've already done that.
Well, I know that, but I'm saying every member ought to hold themselves to that standard. If they did, we wouldn't have these problems. We are the only country on the planet that shuts our government down. The only one. And what I'm worried about, to your point that you pointed out earlier in this segment, is are we now creating a precedent where we're gonna now threaten to shut the whichever party's in the minority is gonna threaten to shut the government down over policy disputes. That cannot be the case.
That is the case, though. Unfortunately, that's what I said to McCarthy yesterday.
And members of Congress need to answer for that back home.
Congressman, do you think what finally happens is the Democrats win, get the carve out, and then another bill through reconciliation funds ICE and CBP? Is that what you think eventually happens, or do you really think you and Congressman Swazi are onto something here?
Well, we are onto something. We're the only bill that has ICE reforms. This whole thing was supposed to be about addressing the tragedies that occurred in Minneapolis, and yet so many of my colleagues are now caught in the fog of war, where they've completely forgotten what the point was of this entire
Congressman,
mission.
people say it's about Chuck Schumer and AOC, and the left flank, and moving goalposts, and there's a lot, but it's never what it appears to be in politics.
Yeah, I can only speak to the Democrat colleagues and the problem solvers that I work with, and we have a good faith relationship. We have good faith negotiations.
Yeah.
You
guys try. I know you guys try.
I like the problem solvers.
I like them too, but it's just it's just very difficult, and that's why approval rating's so low for Congress.
Nobody's saying it's not difficult, but what's the alternative? Our country depends on reasonable people working together to get things done.
Yeah, watching the sausage get made is not good. We shouldn't be eating sausage anyway. It's processed and cholesterol and everything else. So here we are watching it get made. Anyway, Congressman, good luck. This has got our TSA agents and we've got a war going on and we're not funding Homeland Security.
Yep. Should be a simple rule. Every funding bill that comes in front of you.
Hopefully nothing happens. Yeah, hopefully nothing happens because of that. Thank you, Congressman.
You bet.
When we come back, the Masters teeing off in Augusta, Georgia today with a new player in town. Amazon will stream early round coverage. Alex Sherman joins us to break it all down. That's next, right here on Squawk Box.
Time now for today's Aflac trivia question. What adjacent towns are known as the birthplace of American dry fly fishing? The answer when Squawk Box returns. And now the answer to today's Aflac trivia question. What adjacent towns are known as the birthplace of American dry fly fishing? The answer, Roscoe and Livingston Manor in New York.
Well, finally here, it's Thursday, so the Masters, golfers teeing off this morning, but this year there's a new player in the mix. Amazon is joining the party, streaming early round coverage. Alex Sherman joins us now. Good morning, Alex.
Hey, Joe. Yeah, look, the last thing I would ever advocate is for anyone to turn the channel off CNBC, but in these days, you know, you got your phone in one hand, the TV on the other hand, and Amazon, for the first time ever, will have live broadcast rights to the Masters. This will happen today and tomorrow, exclusive coverage from 1 p.m. to 3 p.m. Now, this may seem like an odd fit. Amazon, of course, is known for its giant e-commerce business, and the Masters is probably the least e-commerce friendly sports tournament of any tournament potentially in the world. I mean, the Masters has this steeped reputation in doing everything in sort of an anti-commercial way. They have this long media rights deal with CBS where they get paid $0 every year. That's been going on since 1956, a handshake agreement. The Masters also has limited commercial times, just about 4 minutes per hour, and the only advertisers that can advertise during that commercial time are the Masters title sponsors. So this isn't a clean fit with Amazon in that sense, but really the value, I think, for Prime Video is the halo effect of owning the Masters. It's just really hard to get in the door. I mentioned CBS is one of its media rights partners all the way back to 1956. ESPN has been the other main media partner for the Masters, which will take over coverage both today and tomorrow at 3 p.m. They've had the Masters for many years. USA had it for a little while before ESPN, and this is just the fourth media partner the Masters has ever had. So it's a big deal for Amazon to get in there, and it also shows that the Masters is at least a little bit forward-thinking in the way it wants to broadcast by now having an exclusive streaming service as one of its media partners.
What was I watching in recent years, Alex, where, you know, they'll have Amen Corner, they'll have a streaming camera there for those holes, and they'll follow select groups. Was that on ESPN? So this is going to be different. That's going to be Amazon then.
Correct. So the one part of the Amazon coverage that will extend for all 4 days that Amazon produces will be Amen Corner. And again, for those not familiar with the Masters, Amen Corner is the turn, the 11th, 12th, and 13th holes at Augusta, famed area of the golf course. Amazon will be producing a specific 3-hole production over the course of all 4 days. So even on Saturday and Sunday, you can go to Amazon Prime and watch this, where that's where you will kind of see the Amazon effect. They're going to have all sorts of bells and whistles with their own analytics, you know, swing speed, swing flight, overlays of different players, a golf analyst on set to talk about the different strategies that each player is using for those 3 holes, with the thinking that the Masters is often dictated by the performance of those 3 holes at Amazon. Amazon will also have live coverage of 15 and 16, holes 15 and 16 for all 4 days. They won't produce that, but if the tournament isn't won at Amen Corner, it's often won at 15 and 16. Of course, everybody knows this is the 40th anniversary of the famed Jack Nicklaus putt at 16, and Jack Nicklaus will be one of the featured guests that Amazon will have live on its air during its exclusive coverage from 1 to 3 o'clock.
And either lose it or win it on Amen Corner, you know, because 12, remember Jordan Spieth, and then 13 is always plays into it. I remember Phil's shot around that tree. You remember that? It's just amazing.
Incredible shot. Incredible shot. One of the most incredible shots I've ever seen.
Phenomenal. The way that 13 is designed, the way it's all designed. Then they get the best. Is it 3 brand name sponsors? It used to be Exxon, IBM, and AT&T, and it'd be sparse commercials. Not very many commercials either. Who is it this year? Is it the same 3?
Well, I know AT&T and I think American Express may be in there. Correct me if I'm wrong on that. IBM has always been a long-term sponsor. There's by the way, with the IBM connection there, it's interesting because now you're the Masters has its annual press conference every year. Fred Ridley is the chairman of the Masters and Augusta National. And he pointed out that while the Masters' reputation may be this sort of stodgy thing that I just kind of described, they've always been a little bit kind of subtly forward-thinking. And IBM speaks to that, where they've toyed with this idea of, like, how do we integrate AI into our broadcast? They actually did a thing a couple of years ago with Dude Perfect, the YouTube sports group, where they played Frisbee at Amen Corner in 2022. Ridley said maybe that wasn't the best idea, but it does speak to the fact that even though this club is like steeped in tradition, they are a little bit sneakily tech forward in some ways, where they're trying and they realize they've got to get a younger audience to watch the Masters in some way. And obviously by having it on a streaming service, you are lowering the average age of who's watching.
What was the next one? It was AT&T, IBM, and Mercedes, but then in 2025, Bank of America, I think.
Bank of America,
joined,
that's the last one.
Joined
sure.
as well.
Yeah.
Fred Ridley knows what's going on. I mean, he played in it. I think did he win the amateurs? I don't know. He's an unbelievable golfer himself, which is pretty amazing. I don't know whether his long list of chairmen, very powerful guys down there. It's a pretty good job to have if you can get it, Alex. But you got a good one too. Be sure to check out CNBC Sports newsletter and video cast with this week's guest, skiing superstar Lindsey Vonn. Yeah.
Coming up, a top OpenAI executive saying that retail investors are going to be able to get in on the company's IPO. We're going to bring you details about that next. First, check out the shares. CoreWeave, the company announcing an expanded infrastructure deal this morning with Meta for AI cloud capacity. Includes what CoreWeave says is some of the first deployments of NVIDIA's Vera Rubin platform. That stock up about 7% this morning. Squawk Box come right back. back. Squawk Box. OpenAI's CFO, Sarah Fryer, saying the company will hold a slice of shares for retail investors when the firm goes public. In an interview with CNBC, Fryer saying that OpenAI gauged retail interest in its latest funding round and saw what she called really strong demand. Fryer didn't comment on OpenAI's IPO timeline, but CNBC has reported the company speaking to banks about going public as soon as the fourth quarter. So we're going to keep our eyes on that. There's been some questions about Sarah's role in all of this. There's some back and forth about whether she was demoted but layered by somebody else in her relationship with Sam Altman. I don't know if you read any of that, but there's a whole back and forth going on.
Lots of drama. When we come back, Peter Bookvar's read on the ceasefire, the latest Fed minutes, what he thinks about private credit at this point. We'll also talk about today's economic data points that are coming at 8:30. At 8:30 Eastern, we'll be getting the latest read on jobless claims. We'll get fourth quarter GDP. We'll get a key read on inflation. And this morning, it looks like the Dow futures are now down by about 200 points. NASDAQ futures off by 73. The S&P futures down by 22. We'll be right back.
As America celebrates its 250th anniversary, CNBC spotlights the business leaders who forged American industry and an extraordinary legacy of philanthropy.
I'm Heather Gerken, president of the Ford Foundation. We were created by the Ford family in 1936. They used the profits that they made from the company to create a foundation to make a better world. The Ford Foundation, during the MacArthur era, stood up protection for free speech and dissent. It is one of the major funders of the civil rights era. It helped build the backbone of the public interest litigation world. It has done one thing after another to push forward our democracy, including building public radio, Mr. Rogers, Sesame Street. We are one of the reasons that they exist. In 2008, we started a new program where we gave $1,000 to 1,000 children in Oklahoma. That has now become a national model for thinking about savings. We've been building out broadband for rural communities. We've been working on the opioid crisis. We've been supporting veterans. We've been doing all kinds of work to protect the most vulnerable people. The Ford Foundation hasn't just responded to history, it has really helped shape it. We became one of the biggest foundations in the world. We give hundreds of millions of dollars away every single year, and our causes have ranged very, very widely. We're both a global foundation and a domestic foundation. Some of the work that we've been doing recently has been building out protections for the rule of law and democracy. If I had to sum up 250 years of American enterprise in a single word, it would be openness. Open to ideas, openness to immigrants. Immigrants have been the driver of our economy. They've brought with them ideas and made an enormous difference here. We cannot survive without bringing other people to our shores. There's so much common ground and belief in our democracy. That is a place to build.
a sneak peek of who's joining us in just a moment. Before we get to Peter, let's take a look at the futures this morning. You'll see right now the Dow futures are off by about 175 points after gaining more than 1,300 points yesterday. Dow futures down by 20 points. This comes after a gain of 166 points for the S&P yesterday. And the NASDAQ, which was up by 2.8% yesterday, is indicated off by 58 points this morning. Joining us right now with his insights on the markets, you'd never guess it, Peter Bookvar. He is Chief Investment Officer at One Point BFG Wealth Partners. He's also a CNBC contributor. Peter, you didn't realize it, but we flashed you up on screen before we showed the futures, so we just want to make sure everybody knew who was coming. You say that you're feeling pretty optimistic, Peter, that the ceasefire will last. Tell me about that and how important that is to your outlook on the markets at this point.
Well, I think finally a de-escalation was a big deal. It's certainly better than escalation. I think the economic pain points are only growing with the closure of the strait, and I think the administration realizes that. I also think that once they realized that they couldn't change the regime, unfortunately, and once there was enough military damage done on the Iranians, with those pain points growing, they had to find an end to this and a way out. And I do think, I don't know what it's going to look like. I'm sure the next couple of weeks could be messy with a lot of daily volatility on what the news flow is, but I think they want to get this done, and I think at the end of the day, the Iranians want to get this done. But let's take this one step further. Let's just assume the worst case scenario. Iran doesn't budge. They want their VIG for every ship that goes through. All the Iranians are going to do is sow the seeds of their own demise economically, because the next couple of years, that entire region is going to be redrawn in terms of supply chains and logistics. So in 3 years, Iran's not going to have any money to collect because nothing is going to go through the strait. They're going to go elsewhere. So I do think that there's going to be some sort of deal, and I do think there's going to be free-flowing ships, hopefully in a couple of weeks.
You do have a caveat that this comes with. You point out yourself that we don't really know who we're dealing with, and you say you hope you're not being naive on this point. How do you account for those nagging concerns in the back of your head, just in terms of how you play this for the market?
It's obviously hard. I try to scenario out and game plan the different outcomes. I do think with respect to commodity prices, and let's separate prices from volume, because the whole world is dealing with this price shock. But right now, it's mostly Asia, Europe, and Africa that are dealing with volume shocks. At some point in the next couple of weeks, if the strait doesn't reopen, we're going to experience here in the U.S. volume shocks. But we're all trying to take it as it comes and game plan out. I do think we're in a commodity bull market. I do think that even when this ends, and again, hopefully within the next few weeks, we're going to get a fall again in commodity prices, particularly energy, just as we saw yesterday. But we're not going back to the world that we were before the war. I think you're going to have global stockpiling. I think you're going to have everyone creating their own strategic reserves of a lot of key things. And the world's going to look at a different place. And this is going to keep a bid under inflation and interest rates. It's going to tie the hands of central banks. So those are still issues that we have to deal with. And again, we're not going back to this pre-war environment that we were in late February.
So if you think that this is inflationary overall and potentially ties the Fed's hands, where do you think the inflation rate winds up this year in the United States? Not 2%, but where?
Well, we're going to get the February PCE ahead of the March CPI tomorrow. The core number before the war began is still stuck at 3. We saw very hot PPI for February. We saw much higher than expected import prices for February. So we didn't have a great setup coming into what happened in March. So I think that, well, we're going to get probably some 4% headline prints, but let's just say 3 to 4 through the rest of the year, and that's a far cry from 2. And Kevin Warsh, I do think he's going to maybe want to squeeze in maybe one cut, but I see that more symbolic than anything if I'm right, and if inflation still is 3 to 4 instead of 2.
If you're right on that inflation guess, what does that mean for the economy, and what does that in turn mean for the markets?
Well, it still creates a lot of friction. particularly from the perspective of low to middle income consumers that are still in their own sort of personal recession relative to the upper income spenders that are still, very vibrant in their spend. And it also creates still a very large amount of cost pressures on business. We all analyze the labor market, where is it healthy, is it not, low fire, low hire, but put yourself in the shoes of these small businesses that are dealing with these intense cost pressures. Well, they're trying to cut costs elsewhere, and for a lot of them, their biggest cost is labor, and they're just hiring less in response. So it just, again, creates so much friction that prevents us from really getting out of this sort of 2% growth rate and accelerating further from there.
Okay, so Peter, you have concerns about the inflationary outlook. You have concerns about the potential economic impact for the year. You also say that you think the private credit issues are real, with rising default rates and the bad marriage between retail and private equity credit continuing to be a problem. And you think that the general AI tech trade has exhausted itself. What does that mean, you think, about the overall chance for the markets this year? Are you optimistic or pessimistic?
Well, I'm trying
or
to
are you
find
optimistic
things...
in spite of all of that?
Yeah, I mean, when you look at the economy, we know that the strength has been, as I said, in upper income spending, data center construction. My point on the Gen AI tech trade was more of just the hyperscaler performance relative to everything else. I think the markets are re-rating lower the hyperscalers because they're slowing cash flows. Luckily, up until March, the market was able to find other things to buy. So that's what I'm hoping for the rest of the year, is that, AI tech trade is great, but they aren't the only companies that exist out there. And there's a whole slew of other companies that actually may benefit from Gen AI in terms of improving productivity and efficiency. So I'm hoping that the stock market baton can be passed to other things. And I also believe, too, the international stock market outperformance that was really apparent last year and early this year will reassert itself. On private credit, it was a classic example of too much money chasing not enough good loans. It's a legitimate asset class. It needed to fill the gap of banks. There's still going to be very good underwriters, but there are going to be many others that are not. And I do think overall, with the redemptions we're seeing, the rising default rates, it's going to raise the cost of capital for small and medium-sized businesses until the industry sort of right-sizes. And it's going to have an impact on private equity, which relied on private credit to finance a lot of their deals.
Okay. Peter Burkhardt. Yeah. Thank you, sir. We will talk to you again soon.
Coming up, stock futures under pressure this morning. We'll show you what's moving in early trading. That's next. Then later, former White House senior advisor Amos Hochstein on the Iran ceasefire. Mostly we'll talk about oil. That's his thing. And what comes next? Squawk Box. Welcome back to Squawk Box. There you see the futures. Big gains yesterday, giving back just a part of those. Here's a look at some pre-market laggards in the Dow specifically. Goldman Sachs, as you can see, wow, $897. JP Morgan, Home Depot, Walt Disney. Energy backing back up, going up, got down to about 92 or 93 yesterday, WTI. It's up $4 today to 98. And Bitcoin pulling back slightly. I saw earlier this morning down not very much, but still at 71,000.
Okay, coming up, a closer look at Anthropic's new AI model, Mythos, and the concerns it is sparking in the tech world around security. That's next. And later, Professor Jeremy Siegel's take on this week's market volatility. Don't go anywhere. Squawk Box returns after this. Welcome back to Squawk Box. Anthropic is starting a controlled release now of its newest frontier model. It's called Mythos, and the model has capabilities that sparked a lot of concern among the public and within Anthropic itself. Joining us right now to talk about it is Dave Kasten. He's the head of policy at Palisade, an AI research firm. The idea that they've built this model, they're not going to release it to the public because they think it's too dangerous, but they're effectively going to give it to other companies, at least ahead of giving it to the public. How is this going to work, and what do you think about this?
Hi, Andrew. Great to be here. So the proposal that Anthropic has put forwards is what they call Project Glasswing. And their idea is that they're going to partner, at least initially, with 11 other companies that are significant in sort of the technology ecosystem, companies like Amazon, Apple, Broadcom, NVIDIA, that kind of thing, as well as Google, one of their competitors, in order to be able to try to pluck as many of the low-hanging fruit of cybersecurity risks as possible. Anthropic believes that the AI models that the new AI model that they've developed is going to be able to identify a lot of bugs that previous models weren't able to do so effectively, and humans weren't able to do so cost effectively. And so they're really hoping to try to clear out the weeds of as many of those risks before other models get to the same place.
But what does it mean to every other company out there? So let's say they do this, they get to those companies first, then they release this to the public, and then it's just a field day and a race between the hackers and the companies that weren't in the original 11?
Yeah, so I think my suspicion is that the companies that are in the original 11 won't just be working on their own behalf. When you sort of look at the software ecosystems that these companies have, they rely upon a lot of common libraries, whether those made by common third-party vendors or open source libraries. And so as a result, I suspect much of what like Amazon, by example, would be doing would be looking at open source libraries that many companies rely on, but they might particularly rely on, identifying areas of concern and then trying to get them patched before these sort of bug finding capabilities become more available generally to sort of malicious actors that might want to use them.
Is your sense that once that the model itself is obviously not just being used to find bugs and exploit hacking opportunities, I assume it is that much more powerful for the rest of us, no?
Yeah, that's right. And in fact, Anthropic has said explicitly that this model wasn't developed for the purpose of being a cybersecurity model. Anthropic, as well as all the other major AI companies, have as their core business goal building automated AI researchers. That's AI models that help them make better AI models, that help them make better AI models, and so on. And so software engineering tasks, particularly the ability to do software engineering tasks on your own, are something that's useful for all kinds of economically valuable things. It just happens that it's also security relevant in that you can use it for cybersecurity, offensive and defensive tasks really easily as well.
And, we were talking about this as this most advanced model. Where do you think ChatGPT lives in this? Meaning, they're working on another model. Does their model have the same issues all over again? I assume Gemini is trying to do the same thing. And how ahead of the game is Anthropic then?
Yeah, I think your expectation should be that Anthropic is a little ahead, but not overwhelmingly ahead, and they don't necessarily have much of a permanent moat here. So there was a report from Axios just a couple minutes ago that ChatGPT is also going to have a new model, which is currently codenamed Spud, that is going to go through a similar process in terms of their sort of slow rollout of capabilities because of similar cybersecurity concerns. I would expect that Gemini is not far behind. Google has certainly been investing in automated AI-based vulnerability finding for quite some time. But the fact that Google is partnering with them probably implies to me that at least for the next couple of months, Anthropic has a little bit of an advantage here with this particular model.
Let me ask you just about that advantage, because it really does feel over the last couple of months now, I'd say the last 2 months, that there was a real move towards Anthropic and its Claude model for a lot of folks in the Valley and even beyond. And the question is, how sustainable do you think that is, or do you think we're going to be sort of switching back and forth between models because the next ChatGPT or the next Gemini is going to leapfrog wherever they are?
Yeah, so I think it's going to be a bit of both. And when I talk to sort of professional software engineers that I know, you tend to see sort of two types of folks. One kind of likes finding a model that's pretty darn good and sticking with sort of that family of models as it advances. The other is kind of constantly switching out at sort of the technical level for the latest and greatest model, whatever that happens to be on a given week. I think you would expect that over time we're going to see more sort of speciation when it comes to the different AI companies' offerings. And so you might see more vendor lock-in over time that would occur. I certainly think it's true that when you talk to many coders, they have an expressed preference for either the ChatGPT Codex models or more commonly for Claude Code. And I suspect that sort of taste-based preference might last for some time.
So do you have any sense in terms of either declaring a winner or declaring, do you believe it's a multi-winner game? I mean, the other thing that just happened in the last 24 hours is you had Meta releasing its latest new model.
Yep. So, I think the news is still coming in on the Meta model in terms of how good it is. Obviously, they released sort of their benchmarking results, but it takes a while for people to actually use the models. to sort of say, hey, are those benchmarks really reflecting reality, or do they sort of overfit on the benchmarks? Too soon for us to say, for sure. It's certainly a good model, whether or not it's certainly also not, as far as anyone can tell, a model that beats OpenAI or Anthropic, but certainly a credible showing by Meta. I think you would expect to see that the race isn't over. Everyone's still racing as hard as they can, and they're going to cut as many corners as they can to catch up. And frankly, I think you should ask yourself the question of, would OpenAI have announced today that they were going to do the sort of staggered disclosure thing if it wasn't for the case that Anthropic had led first? I think some people might be skeptical of that, including myself.
Okay, Dave, we got to run, but my final question for you is, you just said cutting corners. Usually when you hear that phrase, at least my ears perk up. What does cutting corners mean in this context?
Yeah, so I think something that non-experts don't know is that every AI model sometimes does bad behavior. It doesn't do what users want. It sometimes lies to users. It sometimes engages in all kinds of malicious behavior. You can read Anthropic's disclosures on this as well as OpenAI's and everyone else's. The more that you're trying to hit a timeline for release of a new model, or you're trying to hit a given benchmark number, the more that you might be willing to accept some occasional bad behavior in order to crank more performance out of your model. And so I think one thing that we at Palisade are worried about is that people will have a lot of incentives to cut corners on safety in order to either get back in the race in the case of places like Meta, or to stay in the race in the case of places like OpenAI, Google, or Anthropic.
Thank you, Dave, for scaring us a little bit this morning. Appreciate it.
Thanks so much.
Thanks.
It is just after 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among our top stories this morning, Fed officials still expect one rate cut this year despite Iran war uncertainty, although risks do remain that higher gas prices could either weaken the economy or drive inflation higher. Treasury Secretary Scott Bessent is calling on Congress to pass a bill creating new guidelines for the crypto sector. In a new Wall Street Journal editorial, Bessent calls the current rules unclear. And Disney is preparing layoffs under the new CEO, Josh D'Amaro, with up to 1,000 jobs, mostly in marketing, expected to be cut. That's according to the Wall Street Journal. Those plans were apparently underway before he replaced Bob Iger.
After WTI had its worst day since way back in April of 2020, crude prices are climbing this morning again. Iran accusing the United States of violating elements of a two-week ceasefire agreement, specifically, I guess, Israel. CNBC's Brian Sullivan joins us to talk about the latest in the energy markets. Back on set again at on Squawk Box.
Thank you for coming in, Brian.
You're very welcome.
Yeah.
Listen, there's a lot going on, and what's not going on is a lot of shipping in the Strait of Hormuz. So first thing I want to do is look at oil prices. Then I'm going to show you what's happening, and I've got some new comments from both insurance executives and Gulf region leaders. First off, you can see oil prices are back up again across the curve. May, June, July, they're all higher. They're not up 15%, which is what we lost yesterday, but they're gaining about 30% of that back. So they're up about 5% or so across the spectrum. Why is that? Well, because we had the ceasefire announcement yesterday, but we're not seeing any real increase in shipping in the Strait of Hormuz right now. Okay, first off, live look again. It's kind of one of the first things you check now when you wake up, CNBC.com, then you go to marine traffic or tanker trackers and you take a look at this. No traffic. Again, all those little red dots and arrows, those are tankers. I filtered out cargo ships, freight ships, tugboats. Those are just crude oil, liquefied natural gas, whatever tankers. Yes, you can see, Becky, there's not any activity.
Yeah, so all of those ones on the left, I get, all of the ones that are stuck in the Gulf.
230.
What about all the ones that are waiting outside? Do they actually, I mean, I understand why you want to get out, you're loaded up and you want to go out. Are all those other tankers actually just waiting to get in?
Yeah, and if I was them, I would not necessarily want to get in because...
Then you don't know if you can get out again.
You just, it's like the Roach Motel. You just don't know if you're going to be able to get out. You can get in, but you don't, if things don't happen. There's 230 tankers that are sort of stuck in the Arabian Gulf, just sitting there. Some of them are full, some of them are not. But there are a number of tankers, all those red dots on the right of your screen, that are waiting ostensibly to get in. Now, how do I know there's 230? Well, Dr. Sultan Al Jaber of the UAE is one of the most powerful people in oil and energy in the world, also a regional leader, coming out this morning and making some pretty strong statements. I'm going to read a statement from him. This moment requires clarity, so let's be clear. The Strait of Hormuz is not open. Access is being restricted, conditioned, and controlled. Iran has made clear through both its statement and actions the passage is subject to permission, conditions, and political leverage. That is not freedom of navigation. That is coercion. So he is one of the most powerful people in the Gulf, basically calling directly on Iran to reopen, or whatever word you want to use, on that Strait of Hormuz. They note 230 tankers that are in there. I didn't have time to make a graphic because minutes ago I was going back and forth with an insurance executive, marine insurance, who said there has been, as of now, no uptick in demand for marine insurance, which means nobody is planning to run that strait. Now, they may turn off their, I want to be clear, they may turn off their transponders. We talked about this yesterday, and sort of drive through. There are ships doing that. But as far as those that are kind of just going through normally, as of now, no uptick, and the UAE is getting ticked off.
Because they can't get
This is huge amounts of revenue in dollars for them. You think about Qatar,
massive pain to their economy.
the biggest LNG plant in the world was knocked offline for 3 to 5 years, called Ras Laffan. Now, Qatar has a huge deal with ExxonMobil. That just started up about 2 weeks ago in Houston, Texas. That'll mitigate some of the economic hit, but for Kuwait, for UAE, for Bahrain, these are massive economic hits as well. And all the region is getting ticked off at Iran, or as we talked about yesterday, and I know I'm a little bit different than some others on this, whoever is controlling Iran or whoever purports to speak for Iran, and it's clear that there seem to be multiple parties, often giving conflicting messages around it. But according to the data, there is no increase. 4 ships went through yesterday. All of them were cargo, freight and cargo, dry bulk basically. 0 oil tankers have gone through in the last 24 hours, at least with their lights on.
I have a question that may not have an answer, but I assume somebody's done the math on this somewhere. Has anybody ever looked at whatever the cost would be to actually control the strait? Meaning, if you, and whatever you think the military cost will ultimately be to control the strait, mathed against whatever the losses are for all of the allies and economic cost of the strait being closed effectively?
It's a good question. The answer would be $70+ billion if you were going to pay the Iran toll. But as the UAE just said, that's basically extortion. You're just trying to extort us because, let's be clear, the Strait of Hormuz is international waters. You can't control it. I know that I don't like to use the term closed or open because that implies that gives Iran the power that it's their waterway. No, it's not. Oman's got a slice of it. Iran has a slice of it.
Right.
But the middle is subject to United Nations, international, maritime, and admiralty law.
What I'm suggesting is
it would be more than $100 billion.
But if we start to look at what the military cost could be to effectively have ships and planes that are
money costs. I mean, you're talking about. I mean, you'd have to take it, right?
You'd have to.
Talking about if the U.S. left part of the 5th Fleet there,
if the U.S. left
UAE put a naval ship there.
If you're just running drones and planes and escort vehicles effectively all day long and all night long every day for the next 5 years, what does that actually cost relative to what the economic cost?
Once you were able to control it, I'm sure there'd be.
Well, that's the problem. It's a good question, Andrew, but would you be able to control it? Because Iran's got rogue IRCG guys that have missiles. They've got these speedboats with drones. They've got drones. They've got mines from World War I. Literally, Ferris mines from those floating things, Joe, that look like tacks, and you kind of put them in the water. They have some of those. This is low-tech stuff here. And it's like some guy in front of the Lincoln Tunnel with a fence just saying, I control the Lincoln Tunnel now.
Right.
You can't do it, and the UAE's coming up pretty strongly against that. This is a big deal, but nothing has occurred. And that's one reason that oil prices are up 5%, because in the last 24 hours, and it's early, I want to be clear, it is early. As your guest from the Council on Foreign Relations this morning, can't remember the gentleman's name. Michael Froman. He said, thank you, it's early and I'm old. He said that we're in day 1. And so to give it time to play out. Effectively, I'm summarizing your interview with him. But nothing, as of now, nothing has happened.
All right, Brian, thank you.
Thank you.
Wish I had better news.
Coming up, Fun Strats. Tom Lee says the market has bottomed, he says, and stocks are headed to all-time highs. He's been quite bullish. We're going to find out what Jeremy Siegel thinks about all this, whether he agrees or not, right after the break. Don't go anywhere. And later, former White House senior advisor Amos Hochstein is going to be with us. The Iran ceasefire, the energy markets, he knows all of it so very well. We'll get his take on where things are headed next.
So
Welcome back to Squawk Box. Take a look at the futures right now. Dow off about 132 points. The NASDAQ reversing as well, down about 31 points. The S&P 500 off about 14 points. I want to bring in Jeremy Siegel, Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business. Also, of course, the Chief Economist at Wisdom Tree. Good morning to you. We set this segment up by saying that Tom Lee was on the broadcast earlier this week, and he was very bullish, thought things had actually bottomed. I don't know where you stand, but I want to know whether or not you agree.
Well, the stock market might have bottomed, and I agree with Tom that we're going to hit all-time highs. The question is when, and I don't think the short term looks all that favorable to me, very honestly. I think what happened on Tuesday was the worst case scenario, and I was actually with Scott Wapner on that Tuesday, was that Iran was going to, if the U.S. attacked, actually destroy many of the ports and oil facilities and rigs up and down the coast. That's sort of off the table. And I think what you got yesterday was the relief rally that worst case scenario is off the table. But, you know, developments now, I mean, oil is still in the upper 90s. And as you guys say, that Venn diagram of demands on each side looks like it has a zero intersection. You know, that's a question. I mean, let me put it another way. We had Delta, which was very optimistic. Then he said there's $2 billion more fuel expense that he is budgeting. Well, how is he going to cover that to keep earnings up? The only way to cover that to keep earnings up is to raise fares. Yes, past bookings have been good, but all past bookings have been based on oil that was 60. So it's not based on oil that's 80 or 90 or 100. And secondly, I think any sort of rate cut is really off the table, and I am beginning to think that the most likely direction on the Fed is a rate hike. Not imminently, and I think that unless something gets really bad, that Powell will pass at his last meeting, which I do think that the next meeting will be his last meeting. But I'm looking at the money supply, and I see it expanding, and I'm looking at commodity prices, and I see that expanding. Fiscal policy, defense spending. I don't see how the Fed can, in fact, ease at this point. That's going to be a challenge for bonds and the equity market.
Professor, just go backwards for a second. Are you suggesting that Powell, on his way out, is going to raise rates, or this is something that's going to have to wait for Kevin Warsh to?
I think he's going to pass. I think the Fed will do nothing at his last meeting. I do think it will, although he might stay on unless, he said he'll stay on unless Trump clears him completely. He'll stay as a kind of thorn in the side of Trump until he clears him completely. But as chair, I think it is going to be his last meeting, and I think he's going to pass. So I think there's going to be no
it sounds to me that you're suggesting that the economic situation is such that the thorn in the side of Kevin Warsh is not going to be Jay Powell. The thorn in the side is going to be just wherever we think we are in this cycle.
Yeah, I mean, right now, I'll tell you, he's got a much more difficult position than it looked like 2 months ago before the war started. Facing much more inflationary pressures than he did before, facing, an increase in credit, money supply, which is something that you generally raise rates on to prevent that from getting like what we had in 2020.
If this is your thesis, and somebody's watching the broadcast now, and there's somebody who trades or invests in the market, they've been in some of the big tech companies. We just had the annual letter from Andy Jassy come out this morning, says the business is on fire, the chip business is on fire, they're going to take on NVIDIA, all this money's flowing into AI and the like. Where do you put your money?
Well, I would think, unless we get a much better resolution, and I hope we do in the next 2 weeks, or with an extension in the next 2 weeks, I really see a sideways market, and I don't see that long bond going down and any hopes of Fed cuts, which some people might hope to stimulate, going up. I still think I'm very optimistic on the long run. I think AI is really going to boost this economy.
But are you in a stagger? You're saying not to buy bonds, and it sounds like you're saying not to buy equities. So
well, I'm saying, no, I don't see a lot of upside until we get a resolution, and that is not looking as good as I'd hope. Which means what? A sideways market for 2-3 months. And by the way, it's very hard to predict exactly.
Right.
Does that mean, don't buy equities? It means hold equities. I'm saying don't sell equities. Listen, there's many times in history where the market moves sideways in preparation for a big rise once things get better. So, I'm saying that right now, I have a hard time seeing a lot of near-term upside in the market.
So what does the Siegel family do with the extra cash it has right now?
The Siegel family would probably hold the extra cash. I don't know how many people have that extra cash. I'm still very, very bullish on stocks. In fact, if you want to know the truth, I think what I see happening, which is more inflation than we had thought, is more reason to go in stocks and bonds. I'm more really worried about the bond rate going up than I'm worrying about the stock market going down. So if you,
Jeremy, I'm sorry, I'm a little confused. You would hold for now and just wait for a pullback in stocks? Is that what you're saying?
Well, there might be a pullback in stocks unless there gets a resolution. I think maybe those lows that we hit last week, I think that Tom might be right. They might hold. The question is, what's going to, with $90, $100 oil, with diesel going up, with, we're not getting fertilizer through that. We're going to see a cost increase. And by the way, we shouldn't ignore the fact, we talk about it, midterms are coming up. These higher prices are coming up right before the midterms. It's going to make any sort of Trump agenda, far more difficult going into the fall. And, with no immediate relief, we have to think of those consequences also. So, I don't want people to say, Jeremy is saying, sell your stocks. No, I am not. I'm trying to give you some idea of where I see some of the short-term trends in the market. And of course, short-term market prediction, as Tom himself knows, is very precarious, but I'm trying to give you some framework.
Fair enough. Professor, I want to thank you, as always, for joining us this morning.
Thank you.
You bet.
Up next, the Fed's preferred gauge of inflation, the PCE index, will be released along with jobless claims, fourth quarter GDP revision, and personal spending data. And then former advisor to President Biden, Amos Hochstein, will join us on Iran, energy prices, and much more. Squawk Box returns after a break.
It's really the only product that I personally found that has that look and feel of wood. It's the closest thing to it in the world of composites.
You just really need to look at it. They've nailed the colors on this. There's a great range of color in there. The grain pattern, the comb look to it is fantastic. It doesn't have that like weird plasticky look. It just looks like it's supposed to be there. It looks like what you want it to look like. It looks like your investment made sense.
Mark Chaikin called me a few weeks back, and he doesn't call just to shoot the breeze. When he calls, it's because something big is happening in the investing world. If you're watching at home and haven't heard the name Chaikin, the man's been a Wall Street legend for over 50 years. Hedge funds, banks, institutions, they're all running on Chaikin indicators. So when he calls, I pick up. And when he told me he was seeing a highly unusual pattern in his data, something that he's only seen a few times in that entire career, I sat up straight. Because every time I've seen it before, it meant big money was on the move. I spent 16 years on CNBC, sat across from hedge fund managers, billionaires, the whole crowd. And what these guys say publicly and what they do with their own money, well, it's not always the same thing, not even close sometimes. By the time regular investors hear what's happening, the trade's already been made. They save, they invest, they trust the system, but they're usually the same people who watch everything disappear, like 2001, 2008, or 2020. That type of shakeup is exactly what Mark is seeing right now. Look, Mark called the COVID crash, the bull market that followed, the 2022 bear market, and the AI bull market, and now he's warning everything is changing. I don't know about you, but that's not something I can just ignore. So Mark and I agreed to privately fund a free video sharing what the data is showing, where the money is going, and the only one stock that Mark says is a buy immediately. Just visit the link on your screen and watch the full message.
Never miss a moment.
All enterprise software in the future, every single character you see on your display, every piece of information that is produced has to be generated in real time.
Oil price shocks tend to boost the price level immediately, but monetary policy only hits the economy with lags.
There could be tens, if not hundreds of billions of dollars of rare earth metals, the moon in this case.
Couch shares of Constellation brands. just off a little bit this morning. The company withdrew its fiscal 2028 outlook and reported slightly weaker demand. The maker of Modelo and Corona pointed to limited near-term visibility in the macroeconomic environment.
And check out shares of CoreWeave, the company announcing an expanded infrastructure deal with Meta for AI cloud capacity, including what CoreWeave says is some of the first deployments of NVIDIA's Vera Rubin platform. That stock now up by about 2 1/3% this morning. Over the last year, it's up by more than 86%.
Coming up next, breaking economic news. We're going to bring it to you. The Fed's preferred gauge on inflation, PCE data. It's going to be released alongside jobless claims. Also got personal spending and fourth quarter second revisions on GDP. We'll tell you all about it. Take a look at the futures ahead of that number, and I should say those numbers. Dow off about 141 points, NASDAQ down about 32 points, the S&P 500 off about 14 points. We are coming right back.
All right, folks, we are just seconds away from PCE data and other key data points like jobless claims that we'll be watching pretty closely after that stronger than anticipated jobs report we got on Friday. Take a look at what's happening with the futures this morning. Obviously, a huge day for the markets yesterday with the Dow up by over 1,300 points. This morning, the Dow futures are down by close to 150 points. S&P futures, which were up by about 2.8%, I think, or the S&P was up by 2.8%, is now indicated off by about 15 points, and the NASDAQ, which was also sharply higher, indicated off by 38. If you check out Treasuries this morning, you will see right now that the 10-year is sitting at 4.29. The 2-year is a little bit lower. It's at 3.78. Rick Santelli is standing by at the CME in Chicago. And Rick, these are some big numbers, but probably the PCE is the most important.
Yeah, I think the PCE is important on GDP. It's kind of the third time around the block. Initial continuing claims, always important, and then CPI tomorrow. And here we go. Let's start out with jobless claims populating on the screen first. Initial claims expected around 210,000, coming at 219,000. That will be the highest level going back to the first week in February. And if we look at continuing claims, they come in below 1.8 million, 1,794,000. That would be the least going back to, boy, I really have to go back. That's the lowest since May of 24. Now, let's look at personal income, down 0.1%. We're looking for a positive number. That would be the weakest number since Dece of last year. And if we look at spending side of the equation, very close to expectations. These are Feb numbers, of course. Comes in at up 0.5%. If we look at real spending, up 0.1. We're looking for up 0.2%. Up 0.1 actually equals our last look. To find a higher number, you're back to October. To find a lower number, you're in May of last year. Here we go. PCE. We go short game first, month over month, up 0.4 as expected. That's 1/10 hotter than the rear view mirror. That equals Dece of last year. To find a higher number, you're going back to January of 22. Excuse me. January of 24. Now let's look at the year-over-year PCE. That's coming in exactly as expected and exactly as it looked last month, up 2.8%. Core, strip out food and energy, month over month, up 0.4 as expected, equals our last look. Year-over-year, 3%. That's exactly as expected, 1/10 lighter than our last look, and that would basically equal Dece of last year. To find a lower number, you're in Nova of 25. GDP, we've seen the fourth quarter a few times, don't expect significant changes, but I'm always surprised. The 0.7 now turns to 0.5, 2/10 revision, but it doesn't change the dynamics. Still the weakest quarter since the first quarter of 25 when it was a slight negative number. If we look at the consumption side, we lost a 10. From 2% to 1.9, that will be also, that doesn't change the perspective or the context. That will be the weakest consumption since it was single digits, up 0.6 in the first quarter of 25. On the pricing side, the price index stays at 3.8 and the core PCE 2.7 as expected and as the rear view mirror. After synthesizing all that data, and I continue to say that markets synthesize data the best. Why? Look at all the betting sites and probabilities we talk about every day. You back things with money, usually get better, at least at the moment, more accurate results. So what we're seeing is we're hovering at 429, a whisker under 430. So that has popped up a little bit. But all things considered, treasuries have been pretty compact considering the volatility encircling those markets. And the 2-year's hovering near unchanged, 378. Key levels, 380 on a closing basis for 10-year, and I would also use it as a pivot for 2-year, and for 10-year, 4.30%. Don't forget, we have the last of the Treasury coupon supply, the third offering, 22 billion reopened 30-year bonds originally released in early February. Joe, Becky, and the gang, back to you.
Rick, what's the takeaway from that? Because I agree with you. The market didn't do a whole heck of a lot on that, which makes me think none of this information was all that shocking. Important, but not shocking or surprising.
It's not important.
Am I wrong to think that?
No, I don't think you're wrong to think that at all. And I know that, you know, the crude oil seems to be playing the tune that everybody's marching to, but you have the treasuries marching at a much slower pace. You have the equities marching at a much quicker pace. The dollar index, of course, is starting to slide a bit from its, you know, flirting with that 100 on the dollar index. Here's the way I look at it, Becky. We had a sticky inflation problem. Now we add into that a questionable inflation issue into the future. And like tariffs, there's a lot of talk about how ugly it could be, but we have to wait.
Yeah, so sick of this crap. We had 20 to 30% inflation under Biden, and they did not go on a rant. We haven't even come near that, not even close. I ain't gonna listen to their crap today. I just can't take it anymore. Looks like we're set up. We're at resistance right now on SPY. Using the 200. We have a triple bottom with a higher lows out of the gate. With everything's set up for a breakout at open, and we got another hour on. It ain't gonna work out. It might go ahead and take off without us. So the actual PCE is flat, 3%. Estimated was 3%. Prior was 3.1. There's nothing wrong with that. And I can't believe their numbers to boot. They never, hardly ever right. They're always revised, and I just can't trade like they do. None of that means nothing to me. Personal spending down. Revised 3%. I mean, that's a bunch of crap. The numbers are never right. It's like throwing a fish hook out in the water, not putting any bait on it. Or even just a piece of string and line without putting a hook on it. I've had fish even bite a hook. So they're that stupid. I don't see how they can trade like that. I really don't. That's uncertainty. I mean, when you look at the numbers, it's uncertainty. You're a good kid, taking care of your dad. I better be a good kid. He's got $2 million. Still on the hill. Let me see. Good morning, YouTubers. Let me see. See me later. See me now.
Hello, my name is Washboardjim. I'm the thinking strategist behind the Sneaky Snake strategy, where I talk about chart patterns, moving averages, and being in the now. I've been trading for 22 years. straight every day, and I've seen things a whole lot worse than what we're seeing now. I'm seeing a lot of propaganda, a lot of things a lot of news headlines that you can't believe, a lot of false information that's going on right now. Too much information, too much Trump deranged syndrome, and it's just a perfect recipe for buying the dip, because this market's in good shape in my opinion, and this is the way it is. I mean, I've seen days a whole lot worse than this. I've been trading, I've seen times a whole lot worse than this. This is nothing. They're making a big deal out of this. We have a lot of Trump deranged syndrome out there, and I've just seen a lot of things a whole lot worse. So I'm very positive. I've called the bottom on the market. We've bounced up. We've had some pretty good little trades come in, some real good trades here in the last week. Some big gainers like from 360 to 3 grand in the SPX. So I'm going to keep scalping until we really start to get some kind of real good answers of what's going on in Iran. But I've seen days a whole lot worse. And I just want to make my point. There's a lot of rookies out there that think this is the worst time ever. It's not. I've seen days a whole lot worse. So I'm just saying, keep your chin up, play the dips, learn how to chart. I use chart patterns, moving averages, and being in the now. There's a lot of fear out there. A lot of people don't know how to trade in the market, and this market ain't down that much. It's not down that much at all compared to what we've seen in the past on worse events than what were taking place right now. So let's kind of look at this here real fast. I listen to Schwab. I get so sick of him. I mean, not Schwab, but CNBC. And I tried to be the devil's advocate. Now they're calling the bottom out, and they're questioning it. They've been questioning everything. We're supposed to be in a recession 3 years ago, 2 years ago, stagflation. It just, nothing they say has been right, from the interest rate cuts to anything else. So as they keep pounding in fear, that's the best time to buy in this market, is in fear. I mean, you got to be patient, and you got to look for the right setups. But, you know, I don't trade in fear. I trade what the charts read to me. And right now we're holding support on the SPY at 672.70. And I still got my low support channels in here just in case we hit a good spot. We hit that low support, I'm diving in this trade. We had a rising wedge breakout and consolidated, and we're consolidating real well after the great runs we've had. That's another thing you want to think about when you're looking at trades. We had a snake breakout, pull back, inverse head and shoulders with a double bottom, boom, back up to the top. And we've consolidated this here run. Now, I mean, we can pull back some and hit that low support, but I think that's as low as it's going to get for now, around between 661.35 and 665.97. But I've been trading for a long time, and I just got to emphasize that I have seen days a whole lot worse. A lot of Trump deranged syndrome out there, and he's doing everything that Democrats would have done 15 years ago. The party has changed. I haven't changed. I'm an old liberal. Now I'm not no liberal. I will never vote a Democrat ever again. Not after what I saw under Biden. So it's just it. I've seen days a whole lot worse than they were under Biden. We had supply chain issues. We had oil issues. We had war. Go ahead, Russia. Jump into Ukraine. It's only going to be a short excursion. The war's still going on. Seen days a whole lot worse. So I just want everybody to be patient. I think I called the bottom in this stock for now, unless something, you know, does get worse. But I've seen days a whole lot worse. I'm Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy. I talk about chart patterns, moving averages, and being in the now. And have a great day. So here's a chart. I should exactly tell you where we're sitting right now. And history has a tendency of repeating itself. So I know I've been trading crows and soldiers for a long time, and I'm one of the first ones to note the yearly candlestick on anywhere. I've not seen nobody else post this. These are consecutive runs. We had, and it just goes on and 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 on. So during the Obama years, we had a huge sell-off where we lost 50% of what was in Wall Street. Wall Street tried to push it on the housing crisis, which was strongly elevated during the Clinton years and started during Carter. And they were selling houses like they were trying to sell DEI here lately to us the last 4 years. Hiring people with not experience, but hiring them on the color of their skin and their gender, which I thought was kind of racist. Unless you were a certain color or gender, you could, and not have as much experience, you could get a good job. And I don't think I think you should work hard, get experience, and be a better person, and not worry about your gender or your color of skin. So that was my excuse why we started this pullback. He wanted to distribute wealth in Wall Street, and it started with him, and it's still going on. So we had like 2 black crows, 2 white soldiers and a black crow, 3 white soldiers and a black crow, 2 white soldiers and a black crow, 3 white soldiers and a black crow. And then all that money printing went on during Biden. And we had 3 white soldiers. So everything is expected. It's already expected. We had a worse pullback under Biden than we have under Trump. We could all, I mean, if they want to play the game, we could go all the way back down to this low support on the SPX, and I still wouldn't be worried. I'd worry if we dip below that line. That's when I would start to worry. But we've been bouncing off major support levels right now. Just, it's nothing. You know, it's really nothing in the market. And the events have been worse than what they are right now. They're bad, but they've been worse. And the market always popped back. Yesterday was a great example. Trading a 5-minute time frame. If you can't read a 1 minute, zoom out until you can read a chart and start trading off that chart. Then when you get better, you can kind of, but you always got to zoom out when you're trading stocks. You just don't go with one chart. You go to 3 or 4 different time frames. And one time frame might tell you a different story than the other. But yesterday, I called out AMD at the bottom. We have the orbs on here, but more important is we have the chart patterns and the moving averages. So we run up on the 5-minute, right at open. We had 3 black crows with a spinning top. We had a tweezer top with 3 black crows with a tweezer bottom. And I called out this dragonfly. This was on the 1 minute time frame. After the crow started showing some real bullishness. Or it was on this side right here, excuse me, on the 5 minute. That's called a dragonfly. So once we hit the double top, hit that 200 again, it already showed that the 200 was resistance. I can't emphasize how much money I've made trading off the 200 SMA and EMA. If you don't have it on your chart, you're not listening. Or you just don't want to listen. You have your own strategy. And if it's working, that's great. But if it's not, you got to switch things up. Tweezer bottoms I've been calling out almost every day with the crows, followed with 3 white soldiers. Then we had another 3 black crows that turned into a dragon butterfly doji. Called a dragonfly doji. Followed with that dragonfly, you had a big old long-legged hammer. Boom! Back to a double top. And that's the same way we traded SPX, all of them. Snake, breakout, pull back, boom. That's the easiest strategy I could ever give anybody. Some call it a W. Double bottom. It's not always a double bottom. It could be a symmetrical flag. It could be a ascending triangle. It could be a falling wedge coming out of the flag, out of this snake right here. The snake is a knife. It's a parabolic knife. So that's just one of many trade ideas, but it starts with a snake, breakout, pull back, boom. It's real simple. If you can wait for that one setup, and what you got to do, snake, breakout, pull back, boom. This is this morning on the SPY. Higher lows, telling me that it's bullish, up to resistance of an inverse head of a head and shoulders. Where's your head? There's your shoulder line, shoulder line, shoulder line, shoulder line, shoulder line, shoulder line. Boom. Head and shoulders out of the trade. Head and shoulders is a bearish pattern, but it will eventually break out of the shoulder line, but it needs to pull back first. You never jump in the trade on the first extension of hitting the shoulder line. If you're in the trade, you get out and sell it. No hesitation. So this is a bullish setup, and we got to break the orb, which was the shoulder line of that head and shoulders. Just don't look at the orbit or at a resistance level. Look for verification to take the trade. I have an A trade when I see 5 things that I like in a stock. 5 bullish triggers. One would be the orb, which would be a resistance of a shoulder line of a head and shoulders. The next would be the triple bottom with higher lows. The snake, the 200 SMA telling me that we're at a resistance level and it keeps failing it. So we got another head and shoulders down here. A whole new setup. Not talking about that one, but talking about this one. This is a inverse head and shoulders. Just the opposite of a head and shoulders, which is bearish. Inverse is bullish. And I repeat these things over and over and over and over every day for the last 2 to 3 years. And if you just follow that simple step, wait for it to break out, do not take the trade, because once it breaks out of the snake, you usually get a pullback, and that was a double bottom, and I would have took the trade there. That's my chart pattern. This is my interest. I'm interested in the stock. I'm not going to take it. I'm going to wait for the setup. So I take the trade, I jump in it, and I sell it at the double top of this here thing. And again pulls back, has trouble breaking the 63 EMA, then you got your triple bottom and you're in the trade. That's your pattern there, that's your pattern there, and that's your resistance there. But I would have been a little hesitant to hold on to that thing and let it run. When you're trading the SPX, you're able to make a little bit more money and spend less sometimes. 3 contracts at $3, or 10 contracts if you were buying the double bottom on, would be maybe on the SPY would be $1 or 60-80 cents. So you're going to spend the same amount of money, and you'll probably make more on those 3 contracts with the SPX, but you can also lose more. So you got to set them tight stops. A little bit more volatility. So we got Tesla. A lot of bears are attacking Tesla right now. They always have. They will never stop. Although it's a better car company than your Rivian and your other expensive EV cars. So we got a double bottom, triple bottom, right at open on Tesla. So that's going to be your solid support. Right there.
Learning with you. You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face to face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience, and they help me fill in those gaps as an educator. People learn differently, but all those ways we actually teach it all come back to the point of making
Double top on Amazon, bearish. PLTR's been shorted by that Burry guy. Retail traders are beating him up. But here's one that's ran from $5 all the way to 200 something in a very short period of time. But you gotta be careful to run up something like that, you know. I mean, that's a lot. That's a big percent. I don't trade as much as I used to. U.S. hits high-cost wall attacking Iran's cheap drones. Bullshit. They're doing everything they can to be so negative in this market right now. And we've hardly moved at all in the past 90 days. We've been in a sideways Darvis box that still looks very bullish. $190-day Darvis box. How many stocks I've seen run like that they try to pump every day? Amazon, Chipotle. Years of sideways. So you trade it inside the Darvis box. It's only had a 40%, I mean, it was up at 200. Look at that run, almost a year. Trump got elected, this thing started booming. I'm calling this out all the time. A lot of stocks had a real good run under Trump. Broke resistance, and they were just overbought. This thing's still way overbought. I mean, it could come down to $82 and I'd buy me good. I'd put probably 20 grand in it. Meta's another one. Meta come out with that new AI. So look at the perfect setups for any eagle eye to see. Support off the 100, 200 EMA. That's all they wanted. They're doing this on purpose so they can buy these dips and get richer. That's being manipulated by headlines and people with illusions of fear. Was like the topping of the cake. Put the icing on the cake. It gave them the opportunity to become rich again, or richer, hitting solid support. That's Meta. And you got Google, which was pumped at double tops and triple tops. Every time it hit a double top, they'd pump it. And we were at 349 during Trump. We had the first little pullback to the 200, which I called out a buy signal. Now, you know, we run from 138 all the way to 349 on Trump. And a little bitty pullback. Biden were getting them all the time. Things were a lot worse back then. We had 5 genocides. I found another one under his watch. Genocides were actually hundreds of millions of people died. Hit the 200, perfect. Hit the 200, perfect. Real simple if you just relax and kind of look at the charts. I don't need much to tell me. Triple bottom, boom, under Biden. You had another big sell-off under Biden. Bigger sell-off than what you've had under Trump. Well, this is a good one. That was just Trump deranged syndrome. Oxy, they were pumping this because Buffett was in it. PIMS was not my favorite trade at the time. It went from $5.65 all the way up to $72 because of fat drug. Then they end up copying it and getting sued. And it came back real fast once they merged with this company or done something. I would never trade that stock. And we hit the 200 EMA as resistance, and I called the double bottom on HIMS, but I told everybody I'm not going to trade it. Then we had PANW bouncing off the 200 at a solid support. I'm not scared. Look how much that bounced up off the 200 SMA on the weekly. I've called these trades out. I said, well, I think we've hit bottom because we're hitting the 200 SMA and EMA, and I've got the 100 up there just in case. And it's on the weekly time frame. Oracle hit the 200. All these institutional traders are watching the 200 SMA and EMA, and you're going to get a good bounce, just like here, just like back here, over and over. And I mean, ever since I've been trading, we did go under the 200 under Biden, where things were a lot worse. Netflix, 200 EMA. I called these trades out. Boom. It's all about chart patterns. Has nothing to do with events or who's president. They're just hitting solid supports. They wanted the pullback for month after month after month. We're overbought, we're overbought, we're overbought. Before any, that was the event that you should have probably been listening to, because they were overbought. Let's say AVGO was at 60 bucks 3 years ago, and all of a sudden it runs up to 414. This thing could pull back a lot more. So I have the caution flag and I'm waving it because I see huge moves in the market. You shouldn't be, I mean, you should see, pull up, zoom out, and you look at, ask yourself, in anything you're trading, is this overbought? Has this been hitting in a Darvis box for years after year after year and not moving? Should I play it within the Darvis box? Or wait for a double top breakout on a pullback or a triple top breakout on a pullback? There's only a few chat patterns that you need to know how to use. TSM's very bullish. It makes all the chips. I called this off the 200 under Trump. Boom! It went from 162 to 390. TSM. Perfect buy signal. I called everything out at that 200. I did a video on it back then. Apple hit the 200. Still hovering above the 50 SMA. Being a solid support. But there's that 200 again. So if you really want to capitalize, just sit here, listen to music, watch that chart, and when it hits the 200 EMA and SMA, you can start loading up your favorite top 5 stocks. I've announced, I said, you need to start working on your favorite top 10 and get ready for the dips. We have a double bottom off the 63 here, and we have a triple top. So we run it up to the triple top, and we got to break the head and shoulders with a two-headed snake. We have a head and shoulders right here. Once you hit that right shoulder line, it fails. So you're at that right shoulder line right now. We have bounced up. So this could be the top point of breakout on Apple. They've been pumping Apple. They know this. They're not telling you this. They're not telling you why they're calling out these trades. Because it's the perfect setup. Nobody mentioned the 200 back here. They were mentioning more drama. They were on a warpath. Everybody was scared and chicken. But that's your key of buying the dip. The 200 EMA and the 200 SMA. Chart patterns, moving averages, and being in the now. I'm in the now because I know I'm listening to a lot of crap on CNBC, on the media. People have got too opinionated. All you're getting is opinions. And there's a lot of them out there. So I've been getting discouraged listening to these people here lately. Most of them are white trash liberals in a way, privileged. We got Master I called out. Had a double bottom with 3 black crows on the weekly. 3 black crows, set up 3 black crows, 3 black crows, 4 black crows, consolidated. We've got JP Morgan holding up to 63. We hit the 200 back here under Biden administration. Would have been a good buy signal. Coin. We hit the 200. We got a triple bottom, so that's ready to pop. This is ready to pop. Coin's ready to pop. We had double bottom, boom. We have a triple bottom, boom. Walmart, recession stock, little overbought. PayPal, not doing so well. Under the 200. It's not one I'm going to trade. I'm going to take it off my calendar here. Okay, I forgot how to do this. CrowdStrike, the 200. We got a double bottom. Got a snake breakout, pull back, boom. We got to break the 50 SMA on the weekly. Right now we're at the 63. So any kind of little bitty pullback might bring that up to the 50. We hit the 50 once. We hit the 50 twice. We can do it again. We got shop. Shop. Head and Shoulders. And the 63 has been resistance, and the 50. So maybe another pullback on it to 110. I'll put it a little bit above it. Yeah, 112. And I'll put another one right here. Well, no, I'll leave it alone. Shop. And then you got CMG. Chipotle, I used to trade it, but I just can't stand the food. There's nothing Mexican about it. We bounced off the 200 EMA on Love on the weekly. Home Depot, we're at a solid support. 3 black crows consolidated. Now we're starting to move up a little bit. We got to break the 200 EMA before we jump up and hit the 63. On the weekly, Affirm, we're bouncing up off the 200. We've got a yin yang triple top breakout. Hit the right shoulder. We're running up into resistance of the 200 EMA. So I wouldn't jump in that right now. I'd wait for a little pullback and scalp it. Morgan Stanley. Hit the 50 SMA. Not hardly a pullback at all. None of these have had anything dramatic yet. But you listen to social media and the world's coming to an end. And I've seen things a whole lot worse. But the rhetoric wasn't the same. This is the first week I've heard resilience. They know that the market is resilient. Unless you get a dope like Biden in there. That can't even wipe his own ass. is like a crazy place. Target went and woke and screwed that company all up. They finally got rid of the manager and got someone with some common sense in there. And we're running up and hitting the 200 now, so we're at resistance. I called this trade to 120 after I found out about the news. I thought it was great news. Same way with Disney. Iger screwed it up too. You got politics involved in your business. You never do that. So this has been in the Darvis box for over 4 years. Because of his stupidity. Then you got Starbucks. Same thing. I've seen things a whole lot worse, bringing DEI into these businesses and starting politics. Big old long Darvis box for 4 or 5 years. They're getting a new CEO, so this could be the time to buy. But not right now. Wait for the setup on the daily or the hourly and scalp it until this stuff's over with in the Middle East. But we have a Head and Shoulders running up into the 200 SMA, which means the stock's still bearish. If it breaks the 200, then you double top it up here to this Head and Shoulders. Take it to 115. I've been trading the same stocks over and over, or looking at the same ones on my watch list every single day for years. And mostly all I'm trading right now is a SPY in the SPX and the IWM. I want to learn how to trade it. See if it's more profitable than trading the SPX. I think it's safer. It trades the opposite. We had pullbacks under Biden. Didn't hear much complaining about it back then. There are genocides going on and 8 wars and bureaucrats were running the country. But there wasn't much complaining back then. Oil crisis, food shortages, 30% inflation. That was all acceptable, not by me. My chicken went from $12, $14 for 5 chicken breasts to $32. Almost overnight, once he was elected. Nobody's complaining back then. So it's really not that bad. I'm very bullish, more than I've ever been ever.
And our laggards from here. A little bit better. There's just so much cap size in that Mag 7 that if that money is deployed elsewhere, it could be quite
okay
in other areas of the market.
I understand. Okay, so at this point now, I know you're underweight NVIDIA and, out on some of these mega cap techs, which I'll get to in a moment. But when you say you like energy and AI infrastructure, what kind of names or things that would drive that?
What supports do I have for Tesla?
So I would say on the energy side, we've liked that. It's been a large overweight for us all year. Obviously with this, crisis in Iran, we've gotten...
I had 339.93, but I'm going to go to the weekly. I think we're kind of sitting here at one. You know, the lowest support would be around 280. The lowest. And then 303.30. And then 340. So those are my three supports. Right now it's 340 to 346. 346 has to break. Does that make sense? Who's this? Tesla earnings coming soon, Wednesday, April 22nd. Did you get that, Randy? 303 would be my next one. But this is my first one. 340, 339. Weekly, we hit the 100. So that's pretty strong right now if you're a bull. I wouldn't be. I think I'd wait till this week's over with. And then come in Monday and look at it. That's what I'd do. We're at a solid support on the candles. 3 white soldiers, Ben, when they have that soldier, they really like to pull back. And there's a good pivot point area right in there, right around 244, 250. I just can't believe the way CNBC's carrying on, and it's really getting me riled up. Especially at Becky Quick. Retail traders are idiots. They're invading our territory. We can't have it. The other day I was listening to one of the fat cats saying they're playing off of our run-ups. So maybe this market's up so much because we had control for a while. We got a fallen wedge too, with big old lip on it. And right now we're under the head and shoulders on the 1 hour. So we got to break. Yeah, we still got to break 346.59 before I'd take the trade. I mean, the setup's there. We just got to wait to see if it breaks that resistance line today. And start building some respect above that yellow line on the 1 hour. That shoulder line of this two-headed snake has consolidated all morning with a double bottom, now a triple bottom. I got a booger in my nose. You ever know someone that no matter what you say, it's always the wrong way? It's no matter what. You just can't have a conversation with somebody. I know the girl. No matter how hard you try, to be nice. Chick's been married 7 times. So I'd tell you something. I hope she never audits me. Okay, make sure your platforms are up. We've had such a good run, we're either going to break out of the consolidation, so it's still headline driven. SPX, I'm in my resistance channel still. We got a break. 6787.94. That's your resistance. And that's going to be a hard one to break. And I think we broke it just now. This was my example yesterday. Pull back. So if we do break out of it, expect a pullback to retest that, or expect 67.60. I'm going to put a little alert right there. Meta had that good news yesterday. Look at that, popping already to double top. I'm going to turn off the air conditioner. I'm going to get hot. See, I had an excellent day the other day, so I don't have to trade as hard. I can be more patient. But Meta, that's one we should be watching close with AMD. The AMD's always been, look at there. Ugh. They can't wait for us to get in it. No. Netflix is almost at resistance to break. We haven't busted above it. We held support for a whole 4 days. Apple's another one that kind of hottie right now. Ding, 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 ding.
Potentially thousands of workers here.
Yeah, I mean, they recently launched ESPN.
They're pumping Disney. Walt Disney planning to cut up to 1,000 positions. Probably DEI hires. Tesla, I'm going to set an alert down here at 340.61. Tesla 340.61. 2. That's a head and shoulders of a two-headed snake. Percentage gainers, losers, we got CCL, Affirm, nothing big. Google down 257. CrowdStrike 213. We got SPX down $9. Oh, gosh, look at that. /ES. This thing going down. We're at the 200 on the 2 minute, which I don't study much, so we'll look at the 1 minute and the 5. 5, we're at 1 minute, we're at the, ooh, yes. Oh, my platform.
AMD pulled back. IWM is starting to move a little bit. We bounced off the 200 on the QQQ on the 1 minute. We're sideways on the SPX, and the SPY is at resistance to break. Looks like a pretty choppy one too. Oh gosh, I can't wait till I retire and I don't have to deal with people. I mean, these people are great. We are great, but working with government people. Snake breakout, pullback, boom. I'll probably get out of this country for at least a couple of years. Meta, AVGO, and Amazon are my gainers in TSM. Mr. I'm glad they cover her boobs on that. I'd stare at them. Look how beautiful that was. 200, 200, 200, 200, 200, 200, 200. Boom. Thank you very much. Off the 200. We hit the 21. We hit the 50. Time to exit.
6,800 strikes are looking good. But I ain't going to take it here. Not at a resistance. Oh, I slept 9 hours and I'm still yawning. $6,800s. Damn. Jimmy. Engulfing candle to the 200 buy signal. Resistance was the 200 SMA. Now, 3 white soldiers. 3 white soldiers. I'll go get me some water. I'll be right back. I'm not going to listen to CNBC today. I'm mad at them.
In a genetic testing using cell-free DNA, and it's so they have 3 business. One is Women's House in NIPT, non-invasive prenatal testing, and they also.
I ain't gonna listen to that either.
Overall, you're feeling pretty positive. Are you fully invested at this point?
Narcissistic Jim, with his ego and his wit, doesn't give a damn what you think of him one bit. The market takes a dip, SPX Jimmy will buy. Bitching at Molly Carolyn, still the apple of his eye. Burp it up, Jim, let it fly, let it roar, let it roar. Stocks tend to rise with a fall.
ain't that boy ain't right.
Bull or bear, calls or puts, doesn't
Matter one bit.
Jimmy's face can't wait for Nancy to come and sit. Fart for a dip, ass making noise. Burp for a rip, cheers from his boys. Jimmy is grinding away on his washboard toy. Burp it up, Jim. Let it fly, let it roar, let it roar. Stocks tend to rise with a fart from his core. Narcissistic Jim doesn't care what you think. He'll burp and fart out loud until his room stinks. Lots of fun he has, his ego's ablaze. Burps and farts collide, the room is so amazed. Narcissistic Jim, the legend, the king, playing his old washboard till that closing bell rings. Narcissistic Jim. Narcissistic Jim. Narcissistic Jim.
UCAR.
It's harder. It's harder for me to trade an up market. What country I want to move to? I want to live Hawaii. I call that another country, but it's not. I want to live in Jamaica. I want to go to Mexico. There's my phone. Now I'm hearing things. But I love Negril. I did hear my phone. Always clean, may I help you?
My name is Brian Wilson. How are you today?
I'm doing great. I'm working right now.
All right, I will call you back.
Thank you. He's gonna call me back. How you doing today? I'm working. That's the best answer I've gave him yet. That's it. You're down 80% on yesterday's puts. We're bullish. I don't think you've been watching any of my videos, have you? You gotta, I want you to do this. I want you to do this for me. I want you to weed out the news. There's so much misinformation out there right now. You gotta weed it out. It'll interfere with your thinking. Weed it out, I mean, do your research. Just don't take opinions. I can't trust any of it. I can't even trust the news that comes out of the White House. I definitely can't trust the news coming from the left, because there's too much Trump derangement syndrome. I've never seen anything like it. Just too much. This 1 minute right here has got me looking good. There's that dragonfly. Dragonfly doji with a tweeter bottom. Now we're coming back to support. NVIDIA. AMD. Oh, knife on Apple. Knife on Apple. Knife on Apple. Wait for the setups today. They're starting to show up. I'm not as bullish as I was the other day because we've had that big run. We might have the rest of the week consolidated. So I'm not going to swing nothing. I mean, there's so much false information out there right now. Or different opinions. They might think their information is correct. Now look at here.
You got false information.
Oh, no, I don't. So Jimmy calls out this trade on the SPX. Boom. 3 white soldiers. Boom. What's that? It's a double bottom off the 200, baby. It's a double bottom. Hey, 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 mama. What do we do when we have 3 white soldiers? It's an invitation to get out. Jam. Do you see what I see? A double bottom off the 200 EMA. Oh, the dog barked. The dog doesn't like my singing. Too bad, dog. Straight to the pound. Oh. Oh, my darling, oh, my darling, oh, my darling Clementine. My darling, oh, my darling.
Apple reversing. Jimmy called it. We got Meta at the 200. AMD bounced off the 21. Oh my gosh, look at NVIDIA. 3 white soldiers. Off the 200. Trees are bottom. James, that was very nice. How do you do it? Chart patterns, moving averages, and being in the now. That's how I do it. $200. If you just came in here with a mind of looking at the 200 SMA and EMA in any time frame, you would become a winner. That's all you got to do. Wait for that 200 to hit. 200. Boom. 200. Boom. 200. Boom, boom. With a triple top. 3 white soldiers out of the trade. Amazing graces, how sweet the sound. Oh my.
in this market over the long term here. So I think there are probably a little bit more headwinds for some of the industrial metals rather than the pure precious metal like gold at this point in time. But we're in a holding pattern across the board in this market, and I think we are just waiting on the news headlines to really give us a sense of direction on where we go next. And even if we have this optimism of the ceasefire, Sam, we still have to kind of reconcile the fact that the economic data beforehand was also showing some weakness, and are we going to kind of see that trend continue even after this resolution between Iran, U.S., and
Yeah, exactly right. All right, KG, thanks so much for breaking us down the price action across some of the commodities for us today and the data. Coming up, we will analyze Wednesday's snapback rally and the larger market impact of the Iran war with Art Hogan from B. Riley. Morning Trade Live is back after this.
It's yet strange how the market shrugs off wars. I've been in so many of them. Not in them, but I mean watched them. But this is a little bit, we were overbought, so this was a good calamity to have. I know these fat cats are interested in buying stocks right now. The way they're talking. The ones that really trade, you know. Not the commentators, but the ones that actually do the trading. Still some of them I wouldn't buy, no matter what. I gotta thin my, my interest is tech. It's always been tech ever since the AOL bubble when I started trading. VWAV Vegas has been hot on me about. I've been watching a little bit of penny stocks. Here's that pump they were doing, PHM, the other day, fat cats. Yesterday. About Boeing. And the Dow, they were pumping Dow yesterday. You just can't follow the alerts. I like it here better than I like it there. That alert didn't make sense to me for one. But now, we're right at support. So what to do? I'm just not in the mood to trade much today. So I see the perfect setup. This is good. Now this don't make sense. HSBC adjust price target to 79.30 from 80.20. You got to be kidding me. That's a joke. Maintains buy rating. That's a joke. If I had a buy rating on this stock, lowers price target. Sasquatch maintains positive on Delta Airlines, but lowers the price target to 78. Citigroup raises it. Argus raises it. Raymond James raises it. Now let me see what I would do. Washboardjim would lower it. To $60. My price target, $60 on Dow. Does anybody have a problem with that? No, why ain't it showing? There it is. So much better. Don't you ever bundle that up again. I could raise it to 61.80. Okay, I'm set. 62.06. Okay, see? Jimmy Wisdom, now he's ready. Ladies and gentlemen, pay attention. Washboardjim on the sneaky snake trading strategy. Okay, the 67.85s. Equities are lower pre-bell as fragile Middle East ceasefire lifts. Now I'm starting to get somewhere. $5. I'm gonna try. Come on. Figaro. There it is, right there. We're here. Prepare ye in the name of the Lord. The 68, 75, 67, 85s at $5.10. Say it's a little risky, but definitely showing some risk. Some risk. It could drop a little more. Some risk. La 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 la. I la 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 la. He's taking a risk. It knows it true. La 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 la. So, duplicate the drawing, some risk too. I love Gloria. I'm gonna take her from you. We're at $70 a contract right now. Jingle bells, jingle all the way. Oh, what fun it is to ride in a one-horse open sleigh. A dashing through the snow, making spirits bright. Shally Wally, oompa, 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 oompa. This could dip more to this next support if this doesn't hold. The yin yang, we could get a double bottom today and be a very strong buy later in the day if it doesn't start to move. Now these went to $5.90 to $6. There you go. I gotta go pee. I don't like having to pee when I'm in a train. Nancy, bring that jug over here, baby. The one I put next to the bed at night. You ready? Here's the other one. This is my second. I got 3 now. I should have sold that one there, made $80, but we'll see if we can get back up there a little bit and sell 3 of them. If not, I got to get out of it. It's $100 ain't nothing. Then I still got to pee. Come on, move. Okay, this is going to be it. If it doesn't hold this support, I'm going to get out. And it could do another V-bottom. But we'll see right here. I mean, dip on down to a double bottom at trend line support. That's my first one. Here, I'll put it right there. No? Yeah. No, put it here. Oh, 480. Get out of here. I don't need your ass. Oh, oh yeah. From Washboardjim. $480. Come on, don't do it.
triggered. But it triggered. It didn't trigger. Go on, let's see it come up. No, it didn't hit it. I thought it hit it. I really did. What was I seeing? Hike. There it goes. Jimmy. 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 Ball and wedge. I'll be right back. I gotta pee. I gotta do it. Oh. Okay. I'm running out of patience. I think it's gonna break. That's a sharp wedge. The market makers have some nice tricks up their sleeve.
It's a fallen wedge with the triple bottom, broke out and pulled back. Boom. It's squeezing. Just now coming out of the channel, coming out of the flag. So I've got my interest. If you're not in the trade, oh! Come on, Jimmy. Come on, Jimmy. I'm learning. Come on, Jimmy. Well, my patience are running out with this falling wedge. My patience are running out with this falling wedge. Sneaky snake, break out, pull back. Broke out of the falling wedge. On this next pullback, you might want to go in small. It's called the sneaky snake trading strategy. It's the sneaky snake trading strategy. 490, baby. If you're a little nervous, you might want to scale out here. Or ask old Nancy for a shot of vodka. I'm holding on, baby. 'Cause we just hit the 63 with solid resistance. Take your profit. And we're at $5.10. If you bought enough, you might be able to pay your rent. Out at $5.
Jimmy goes marching on again, hurrah, hurrah. Jimmy goes marching on again, hurrah, hurrah. He takes the call and it falls down. He sees a falling wedge fall around. Jimmy goes marching again, hurrah, 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 hurrah. I'm the only singing day trader around. No one has my sound. I call them out before breakout. I'm at ease today. I don't want to trade my life away. We've had too big of a bounce. We've had too big of a bounce. It's ridiculous when you got a singing day trader. Chart patterns, moving averages, and being in the now. I'm not scared. I'm not scared. I don't care what you think. When I fart, I really stink. I'll do it again and repeat. We're at 510 for another win. I can't take it anymore. If you bought the dip, you might watch it rip. The guy that traded the Darvis box, he had no faith in the falling wedge, but Washboard guaranteed you would get an upper edge. Thank you very much. I'm going to go up to the grocery store and get my salad, dressed salad and a cucumber, because I'm going to have salad for lunch. I might get a can of, should I put sardines in my salad? It's not a bad idea. I'll have salad and a can of sardines. That'll be my protein and meat, with all kinds of vitamins. I'm going to line up my little sardines in my salad. But I kind of wonder, should I get a vinaigrette or use what I've got? I'm going to use what I got, because it ain't a lot. I'll meet that chick in the parking lot. Oh my gosh. Always go over your top 7. Today better was a no-brainer. My God. Ladies and gentlemen, we're at $5.40.
Jimmy called the Apple knife. Apple knife recovered. Yeah, what's up? May I help you?
Hey, Eric.
You can't talk to me right now, baby. All these women keep calling me while I'm working. I get sick of it. Jimmy mentioned the video. He also mentioned AMD on the pullback, bouncing off the 21. Meta bounced off the 200. So when you're trading stocks and you're using my moving averages, look for the one support that it respects the most. Does that make sense? If anybody has any questions, I'll be back from the store. $6.10. Jim has one. Oh. I'm going to get in trouble. Because I was in a hurry and I needed to go to lunch. We're at resistance now. That hit $7, Randy. Are you going to beat me up? Well, I better go get something to eat. I'm going to leave you with these farts.
You got false information.
Just don't remember their false information. You've got to weed out a lot of this propaganda.
You got false information.
You've got to weed it out. Because it'll drive you delirious. I mean, I can't listen to these people anymore. One minute they're calling the bottom, and the next minute they're calling doomsday. It makes no sense to me at all. I can't stand switch hitters. I dated a switch hitter once. It drove me nuts. So it's me or nobody, baby. If I ain't playing these games of switch hitting, no, I will not join your orgies either. So this is a trader's tip called a pivot point. After hour low, dip, resistance, and then what was resistance now becomes support. We got a double bottom. 10-4. Pivot point. Trader's tip. Trader's tip, trader's tip, watch the stock just rip. Trader's tip, the pivot point. I'm glad everybody's back in my room again. I was worried for a couple of days because of my rant. I was really worried because I've had days a whole lot worse. Oh, what rant? When I talked about my childhood past. I mean, I had good parents, but they were definitely Democrats and racist, but that was my rant. That one side ain't better than the other side. Some are more respectful, though, on one side compared to the other. That I've had days a whole lot worse. I mean, having epilepsy and being told that you would maybe live to be 20, but not knowing I had epilepsy. They thought I had a brain tumor. Back then, they didn't know how to operate on brains. Or radiology. But I had epilepsy. So I've had days a whole lot worse. I'm glad to be here. I'm glad I can drive and not tell nobody. If I told this Department of Transportation I have epilepsy, I'd probably be on disability, collecting a free check and free lunch and free health care, and not making something of myself. But I choose the rough route to stick it out and beat it I'm way overdosed when I was young on pills. Sleep all day, sleep all night. I kept hiding them in the closet. I got a pile about 1.5 feet high one day. Mom went and found them. They kept giving me more and more pills because it wasn't doing anything, and I didn't like taking them. So yeah, right now I'm gonna go get me a salad. There's that ST. Ooh, look at that STC they pumped the other day. Jeez. They're pumping this stock up to break out to have the big knife. I guarantee it, this is a cost average thing because they got stuck in it. Do me a favor. Just do me a big favor. If you listen to what I listen to on a daily, the CNBC and Squawk, call them out. Call them out. They're never hardly ever right. Watch the stock, and if it gets a big knife, you might want to take the trade. But don't ever take the trade when they call them out. Just don't do it. Or anybody does it. Do your own due diligence, your own homework. I show what I do live. They don't do that. Schwab does it some. They'll chart, they chart them up for you. And he's a good chartist. Him and I would be a good team together. Call out, say, like if they say AMD's getting ready to break out and we got a target of 600 on it, call them out by saying, no, in your own thinking, I'm going to wait for a pullback and then take the trade. I'm not going to take it when they mention it, or I got to find the support of my own. And I show the supports when I do them, but they don't until they chart them. And then they still give you fuzzy math. You don't know to take the trade or not. He's just giving you a scenario that it looks bullish or it's bearish. I hardly ever took any of them. I've got a watch list full of them, and I wait for the right time, because I know they constantly talk about the same bogus stocks every day. And they're not bogus, but they might be. It's like I had someone just, I don't trade 52-week highs. I won't do it. I'll wait for a pullback. Because they tried to do that to you last year when tech. And if you would have done it, you would have lost a lot of money. I was saying don't take their trades. Wait for the pullback. Then take it. So that's what I mean by call out. I don't mean call them out like I do. I do it on Twitter. But I would have, if I'd have saw this morning, I would have took this trade. Definitely would have took this trade. If I'd looked at that last night, I'd have been ready to take it today. I didn't look at it. I would have took this trade. 20-day support level. Darvis box. Knife to support. There'd been a no-brainer. I would have took the trade. But maybe there's a system, people out there, when they do call out these trades, that they short them. They buy puts. That's the same way I'm thinking, you know. That's what I said yesterday. I said, don't take his trade, it's going to pull back. They pumped it for like 2 days, 2 or 3 days. They got what they wanted out of it, and they suck it to you. Stuck it right to you. And the ones that probably got caught in it had bought back in to average down to get out of it. I just don't see. They say we're in a recession, and then they're pumping Constellation brands, and it's liquor, and they sit there and tell you right there that sales are down, and that's because people started getting high on weed instead. Alcohol makes you do a lot of mistakes. Weed sedates you. NVIDIA popping up again. I'd see what the news is on NVIDIA. I'm going to go get my salad. I'll just sit here and keep saying it. I got to get a salad. I want to have a salad. So I'll get salad and a cucumber. And I've got my tuna. I'm going to try this salad with this here, sardines. I got to try to find the best sardines at a reasonable price. So I've been doing a lot of homework. $7.60. Randy. He's never going to talk to me again. He was one of my best friends. It's at $8. He was even going to let me take out his wife. I bet that's off now. Watch my video. Watch my video of Days a Whole Lot Worse. And it brings everything. In fact, I'm going to play it right now again, because I think everybody needs to hear it. And I'm going to prepare myself, and then we'll get back to things. Hello, my name is Washboardjim. I'm the thinking strategist behind the Sneaky Snake strategy, where I talk about chart patterns, moving averages, and being in the now. I've been trading for 22 years straight every day, and I've seen things a whole lot worse than what we're seeing now. I'm seeing a lot of propaganda, a lot of things a lot of news headlines that you can't believe, a lot of false information that's going on right now. Too much information, too much Trump deranged syndrome, and it's just a perfect recipe for buying the dip, because this market's in good shape in my opinion, and this is the way it is. I mean, I've seen days a whole lot worse than this. Been trading, I've seen times a whole lot worse than this. This is nothing. They're making a big deal out of this. We have a lot of Trump deranged syndrome out there, and I've just seen a lot of things a whole lot worse. So I'm very positive. I've called the bottom on the market. We've bounced up. We've had some pretty good little trades come in, some real good trades. here in the last week, some big gainers, like from 360 to 3 grand in the SPX. So I'm going to keep scalping until we really start to get some kind of real good answers of what's going on in Iran. But I've seen days a whole lot worse. And I just want to make my point. There's a lot of rookies out there that think this is the worst time ever. It's not. I've seen days a whole lot worse. So I'm just saying, keep your chin up, play the dips, learn how to chart. I use chart patterns, moving averages, and being in the now. There's a lot of fear out there. A lot of people don't know how to trade in the market, and this market ain't down that much. It's not down that much at all compared to what we've seen in the past on worse events than what were taking place right now. So let's kind of look at this here real fast. I listen to Schwab. I get so sick of him.
Always clean as Jim.
Schwab at CNBC, and I tried to be the devil's
You know what?
advocate.
You're a
now
fucking
they're calling the
scam.
bottom out, and they're questioning it. They've been questioning everything. We're supposed to be in a recession 3 years ago, 2 years ago, stagflation. It just, nothing they say has been right, from the interest rate cuts to anything else. So as they keep pounding in fear, that's the best time to buy in this market, is in fear. I mean, you got to be patient and you got to look for the right setups. But, you know, I don't trade in fear. I trade what the charts read to me. And right now we're holding support on the SPY at 672.70. And I still got my low support channels in here just in case we hit a good spot. We hit that low support, I'm diving in this trade. We had a rising wedge breakout and it consolidated, and we're consolidating real well after the great runs we've had. That's another thing you want to think about when you're looking at trades. We had a snake breakout, pulled back, inverse head and shoulders with a double bottom, boom, back up to the top. And we've consolidated this here run. Now, I mean, we can pull back some and hit that low support, but I think that's as low as it's going to get for now, around between 661.35 and 665.97. But I've been trading for a long time, and I just got to emphasize that I have seen days a whole lot worse. A lot of Trump drain syndrome out there, and he's doing everything that Democrats would have done 15 years ago. The party has changed. I haven't changed. I'm an old liberal. Now I'm not no liberal. I will never vote a Democrat ever again. Not after what I saw under Biden. So it's just it. I've seen days a whole lot worse than they were under Biden. We had supply chain issues. We had oil issues. We had war. Go ahead, Russia. Jump into Ukraine. It's only going to be a short excursion. The war's still going on. Seen days a whole lot worse. So I just want everybody to be patient. I think I called the bottom in this stock for now, unless something, you know, does get worse. But I've seen days a whole lot worse. I'm Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy. I talk about chart patterns, moving averages, and being in the now. And have a great day.
Jim said V recovery. Unbelievable. I want to note something here, and I want you to pay attention about the angles of the wedge. This is a sharp angle downward, and I've recognized trading it for so long that the sharper the wedge, sometime the better of the breakout. So that's why I got excited about this fallen wedge. The sharper, you know what I mean by sharper, right? Someone say yes.
Sharp is in drop. I didn't have my belt on. I gotta go. I'll be right back.
Trade, of course, Cisco here.
Yeah, well, looking at it today, I want to definitely point out it's at the kind of the higher end of the range, which it may be due for a pullback here. But I like the stock. I like the options on it. I'm looking at January 15, 2027, the 75 strike price. You're paying about $15 for that, maybe getting a little bit lower now that the market is open and the stock is down. But your break even is 90. The stock was just recently, if you look at the chart, February 12th, it was at about 87.50. So we're talking about $2.50 higher than where it was about a month and a half ago. And that puts you at break even. So I would take half a position right here if I was a trader. And then if we get a pullback to the 10 or the 50-day moving
Trades
average,
just like me.
the other half of the trade,
Did you hear that?
Sit back and just let it play out.
If you're in doubt and you think you got to run, go in small, and if it pulls back, double down. And don't go in big. I mean, just take one call at 340, and if you're wrong, you don't take a big loss, you can get out, or you can add on if you think it's going to bounce off of a chart pattern. Moving averages are being in the now.
Double bottom area.
Yeah, so when I look at CrowdStrike, the thing about this company is as AI continues to grow and advance, cybersecurity is going to be more important than ever. They put out their recent report at CrowdStrike and said AI-enabled attacks rose 89%. I mean, 89% year over year, there's more attacks being generated on AI systems or being created by AI robots trying to break into companies' data and information. And that's only going to continue to grow. I know there was a report that came out that OpenAI was saying that they can't even release their latest product because, you know, if it got in the hands of bad guys, it wouldn't be good. And so that just goes to show that even as the technology advances, there were going to be continuously new problems, new issues with cybersecurity. And CrowdStrike has their Falcon AI native system that's implemented to scan and protect from AI. Also, they have the deals with CRM. And you remember when the airplanes and the government systems all shut down, it was because CrowdStrike had a glitch for a moment. And that just shows how much everyone is depending on their software. And I think they're going to get the AI piece of it figured out. From a technical standpoint, they're well off the highs. The stock is down from 559. It went as low as about 370. So we're talking about 170 points off. I do want to see it get back above the 50-day moving average. Today it's retracing, but I think if it comes back down to the 380 area, I'll share the trade with you in a second, but I like to see it pull back.
In a second.
See if it can bounce again off that 380 area. Then I think
Okay,
it's a position.
we're pulling back.
Yeah, I like that you called out the blue screen of
New
death, or whatever it
resistance
was called.
will be-
I'll never forget that day. But I mean, talk about like the recovery and then some of.
New resistance will be the previous high. Use the body of the candle. You got the 21 now, but I think we're going to come back down here and hit this 63. But your first, second, then third. Got it? First, second, and third support. Now you look at the 5 minute. If that reads to you better, it would be this support right here on the 5 minute, and that's right at the 9. So that would keep it still bullish. You're still bullish as long as you stay above the 9. That could bounce off right there. But again, this is my lunchtime. I know things slow down now and you need to be looking for the setups. And I got to scratch my balls and I got to leave. And I'll be back. Treat everybody with kindness. That's all I ask. Except liberals. bags. Boom! Damn! Damn, Randy! Randy, I need mouth-to-mouth resuscitation. The news all the time. It'll screw your head. Don't listen to it anymore. You know, I don't even watch the news. And I don't listen to a lot of these rugrats. I don't think they know what they're doing. I truly do not. I truly believe that fundamental traders have no clue what they're doing. Because if they were fundamental traders, they'd be selling the market right now on their propaganda. If it's so damn bad, one thing that people, well, I know it. A lot of liberals don't know it. That this country is resilient. It don't matter what gender you are, what race you are. You put in the hard work.
That would push prices up potentially, further.
You can be successful. No matter who you are or what you are. Even if you're a crackhead or a gangster, you can stop. I got my GED. I come to a point in life where, man, I ain't going nowhere. I'd be begging for welfare. But no, I didn't want to take that route. I wanted to work hard.
Few commonalities. First off, inflationary regimes last a long period of time. Secondarily, wars are inflationary. The last part is that inflation regimes present in waves. Burst of inflation, pocket of disinflation. We had a lot of inflation post-COVID, right? We increased the money supply by 42% basically overnight, and at the same time we had broken supply chains. Fast forward to today, we've got war breaking out. We've got a situation where supply chains are obviously constrained. This is going to lead to a lot more debt. You could see everywhere you look, you could see inflation expectations are rising, not just in the United States, globally. Inflation risks are higher, it needs to be addressed.
So, I mean, as we assess some of the trends you've seen, like you...
God. I just can't take it. Why didn't they act like this during Biden? When we had 30% inflation, when we had 9 wars going on in the country, and genocides. It makes no sense to me. It tells you how much full of crap they are. Even the best of the best are still trading like they're trading in 1920. I'm gonna make my lunch. I can't listen to these people. Then I'll sit here and fight all day long. I don't like this manipulation in the market one bit. I had to fight this back during Biden when we had that full year pullback. They weren't talking like this, and it was a lot worse. At least 30% pullback on the top, and they were talking sweet, and the guy couldn't even fucking wipe his ass. $29.40.
At Frontiers, we've cracked the code on unleashing coal's true potential. We believe we're at the Rockefeller.
For many years, I was born a poor white man, living in a one-room shack, paling water from a well, with a switch tree in the back. And every time I was wrong, my grandma would play this song. She would tell me to go to the tree and take off a branch. My grandma was the only person that ever whipped me. Mom was too scared and Dad was too scared because I had epilepsy. I was picked on in school, but that never stopped me. I became a champion when it came to boxing. I became a champion when it came to playing music.
not having to worry about women. I became a champion when I bought my first business. I was selling Kool-Aid at 8 years old and mowing yards. Although time was against me, I lived as best as I could. Once I passed that threshold of 20, I was still alive, partying like I've never partied before, driving hot rods, went to college, became a homecoming king nominee, and all the women would not let me be. So I sold my picture frame shop and I moved to Hawaii, where I had more girls than I ever knew what to do with, from all parts of the world, from Africa to Asia to China to Spain. I never felt like I ever had pain. Now I'm gonna go make my salad and meditate for a bit, because I ain't not giving you any shit. All right, I'll be back in a bit. We just keep moving along, and that is the end of my song. So don't ever have no one tell you that you just can't get along. Because one day Iran will be safe and peace at last. Best trader's tip I could ever give you is a sardine salad.
Mine calls it the high. Justice Department opens investigation to the NFL. They're pumping Meta. I don't think I'll ever put a sardine in a salad again. That cucumber tastes a little odd. Okay, Tesla got news. They plan on developing smaller, cheaper EVs. Randy! Damn it! Damn it, how did I get that? I can't listen to CNBC no more. And Schwab is getting just as bad. Life has become sad. The propaganda is too much. It's just too much. And I'll sit here and eat my salad. Yes, I was. I'm looking at Cisco. Oh no. Oh no. I'm looking at Cisco. It's up too much. Cisco is. About this salad. up too much. Cisco is la la. Listen to the drip and watch the stock rip. If you know what is best, I can't express how easy it is to make a lot of money in the SPX. Every single day this week, let me speak. And my voice runs high. Take a run, and we'll have some fun. Let it be said as they roll their eyes in their head, eat your croutons. Speaking of Biden, this crouton per pack was at $4. Now it's at $1.59. Yes, things were a lot worse. Salad, $5.49. It's now $3.99. Tomatoes, $3.99. I paid $2.59. Chicken back down to $14. Eggs $3.99. They were at $12. Things were a lot worse. Hamburger, $8 a pound. Now it's $5. Remember? We had to eliminate cow farts. Cow farts are bad for the environment. Damn it.
Look for the 200 SMA on the 1 minute time frame. La-di-da-dee-dee, la-di-da, 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 la-di-da. Just wait for the 200 SMA. La-di-da, 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 la-da, la-di-da, 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 la-di-da. Wait for the 200 SMA. La-di-da. I'm the bear, it's gonna drive you crazy. I'm the bear, it's gonna make you cry. If you listen to the propaganda, you might cry. And I'm not telling you to wait for the 200 SMA. We'll be trading it all day. Pull back and hit that 200 SMA. Okay, I gotta get my coffee and I'll be done. Oh man, damn, where's my phone? Oh jeez, can't find my case. Well, that's kind of a shocker. Well, don't know what to think. Guess I gotta get on the internet, order another one. Anybody wanna buy me a phone case? Nice leather one. I'll give you my address.
Ouch. Brandon, what you got to say? Shop.
In the years to come.
I wonder if it will totally take over, because I mean, listen, I can see both cases for shopping, whether it's the AI agent side or traditional. You know, I like to shop, so I'm just saying, like, you can see the use cases for both sides of this. But it is a head scratcher for me as well, just like Kevin, with regard to the divergence between what you all are seeing in terms of sentiment versus how shares are trading. So the question is, what is the market telling us about Shopify? Is there really a concern? You know, I know you're saying that the threat of AI agents shouldn't be as much of a concern as it seems to be, but is it? You know, is it really something to pay attention to as it relates to Shopify? And is there something to be said about, you know, kind of just the bigger picture and worries about the consumer and inflation? Does that come into any of your analysis at all, Landon?
Yeah, I think so. And just to be clear on the search, I'm talking about AI search replacing web search. I still think that people are going to go to their direct websites and they're going to search and shop on those websites. But I'm saying when they're trying to discover a new product, I think that AI is going to take over the next few years because it's just better. It's like Google versus Dogpile in 1995, right? I mean, or Yahoo. I mean, it's crazy how much better the results are getting. So I think it will replace that over time, but people definitely go to their favorite merchants directly. But when you look at...
We do have some resistance coming up. We just broke my resistance at 68.1492. No, that's the 200 SMA. So we got the orb resistance on the yearly 7,000. $7,000. Tesla got good news. CrowdStrike. Foreign. Washboardjim, please help me with CrowdStrike entry. Tesla might be reversing. CRWD. How'd that happen there? two of them up here. SPX is at the 63. Okay, SPX is at the 63. SPX at the 63. This is a major support right here. Not cooperating. There we go back. Let me see how these probably too high. No. But if we drop, they'll drop like a rock. So the 6830s take off. I'm done with the 6885s. Ladies and gentlemen, get to your battle stations. We have a double bottom with a triple bottom. I don't see a triple bottom, Jamie. Can you show me? Show me. Oh, I see it now. VICTORY. That is Washboard Jim's battle cry. If I don't hold, I will sell it. This is the 6830s at $4.40. Risky. SPX. Strike. At $4. $4.40. My name is Washboardjim. Link. I don't know. Oh, I was trading off the slashy. Yes. What am I doing? Oh, I can't believe I did that. Break the 9. The squeeze begins. $5.30. Look there. Jimmy, that was $90 a contract. How you do it? Well, chart patterns, moving averages, and being 580. Oh my God. I just can't stop winning. Because I don't listen to the crappy news. You know what I'm saying, man? You know what I'm saying, man? and doing a lot of partnering. We're bearish. We're bearish on net. Look how beautiful that was. So Washboardjim's going to take a few minutes and talk about this trade. On a nice, warm spring day, I ate one sardine and a salad. Would I recommend it? I don't think so. Maybe if you had a better sardine. Maybe it smelt. But as I was looking at the SPX, I suddenly seen a double bottom, or I suddenly seen it hit a very important support level. The 63 EMA on both SPX and /ES. So on that day, April 9th, 2026, I took the double bottom. I placed the trade at $4.40. It jumped up to $8. The crowd went wild. Again, the bras come up on my stage. Everywhere I go, I'm chased by women. If it's not at church, or a swimming pool, or on a beach. So I took the double bottom off the 63 and noticed 3 white soldiers. I figured I'd better behave and take a cut. Because it was my gut that told me to sell, now it's time to ring the bell. peace and calm, not listening to any propaganda in sight. Because I know I've had days a lot worse, and that's right. Propaganda has come into too much rumors and too many opinions. I have an opinion of my own, and that's to buy the SPX in the buying zone. Oh boy, but funny, I'm not even high. We're at $7.20. Should I sell? Why? If you count to 4, you just might make a little bit more. If you can count to 3, you can trade with me. I'm a poet, and I seem to not know it. But I'm gonna draw a trend line and show you if this stock will decline. My words are in rhyme because I am just that kind. They call me the sneaky snake, where chart patterns, moving averages, and being in the now will take you a lot of places. Anyhow, as I draw the trend line, which you will see, I gotta make it stick for you and me. Hickory dickory dock, the mouse ran up the clock. It led out with 3 soldiers, now holding support off the 9. We did a flip, as you can see. We were under the 9, so let it be. Once it did a double bottom at the 63, I was ready to take the trade with thee. We have a 1, 2, 3 and a pullback, yay, with a breakout. So if you can count to 4, you just might make a little bit more. Every day is a different day, as they say when you're trading with Washboard. 440 is a good number to get out at. I mean, you could you'll be up at $220 a contract. Now you're up 220. We're at $7.20.
Vunkler. Holy fuck, thanks for the 20 bandos.
Yeah, he did.
Yo, 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 what the fuck? What the fuck? Nah, bro.
Oh, 850. All right. Jingle bells 100%. Oh boy, 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 oh boy. Rudolph the red-nosed reindeer had a very shiny nose. When old Rudolph would come to town, he would rub Jimmy's nose. And then Rudolph introduced me to his woman, and I said, I don't have time for you today, because I'm trading SPX and it's running my way. I got 880. Now you're up 100%. And you're out of water. What are you going to do here? You need to go to the grocery store. Bashing through the snow in a one-horse open sleigh. Over the roads we go, passing all the way. Why are you singing Christmas carols today? Because I got my car fixed. And I've been so sick of it for 2 years. And I've been lied to, right and left, by idiots. $9.40, Randy. I'm dreaming of a white Christmas, just like the ones I used to know. Okay. I'll be right back.
Sardine hamburger made out of the bun, sardines. They are now $10 and doing good. Still live on YouTube. To tell the story. Okay, that was a good call right there. Off to 63. What's this? Net. Mm-hmm.
I'm going to go through the watch list. These people on CNBC and Squawk Box, or CNBC, Squawk Box, and Schwab. Schwab's been a lot better at it. So a lot of this fear was a good excuse to have a small correction, and I mean small. 75 points in the SPY is nothing. It's nothing. $75 from the high. So everybody's got all this fear, all these opinions. You got to know. You got to stop listening to it. No, I've been in arguments with traders before about news. But if you keep repeating the same news over and over again, just like in a speech, you keep saying the word depression over and over and over again, you might get depressed. And then you'll start following that. The psychology of training is very hard to break through. That's the hardest part. It's all about psychology. Some wait to hit that 200 SMA and start paying attention to the market. Some don't. I do. It's always been a buy signal. Look, we hit the 200 down here. Boom. Now all the moving averages got real tight. Notice my moving averages. The main ones, the 9 and the 21, did go down to the 200. We had a crossover. We hit the 200 here, we hit the 200 here. So if I, on the daily, if I go back 10 years, we hit the 200, we hit the 200, we hit the 200. Here we had the pullback during Trump drain syndrome and a real fast bounce back up. They thought Kamala was going to win. I didn't see it happening. She fucked up with the border. She was the border czar. She was appointed the border czar. And then she denied she was the border czar. She didn't even know Russia is a little bit bigger country than Ukraine. The way she explained AI She's about the dumbest chick I've ever met. She got her way to the top with a blowjob. There's no way she was going to win, but she could have won, but though her campaign sucked. Bringing hookers up on stage, trying to sell a vote to just a certain class of people and not trying to integrate the whole class like Trump did. For the people. Kamala was for the rich. So she didn't have a chance. I didn't think. And I was right. I still think Trump didn't lose the election, he got it stolen from him. I can't see how many people would vote for Joe Biden. You'd really have to be brainwashed. The guy didn't even get out of his basement for his campaign. He couldn't even walk up on stage without tripping. So a lot of the media that you're listening to is all more or less progressive liberalism, not like it was 15 years ago. I would listen to them, but not these days. So I'm feeling better about the market than I ever have right now, even with what's going on, because I think there's going to be great peace, and if, mark my words, you know, if I'm wrong, I'm wrong in 3 to 5 years. Not a World War III. I see a gap right here on the SPY. Just caught my eyes. I'm looking at this chart. So I'm going to call that a gap trade right there. The SPXs have dropped quite a bit now, 100%, 50%. I never could understand that. If you go up, it's 100, but if you go down, it's only 50. $6 and something here. Support right there. We got 2 support channels here. Got a triple top breakout. You got a triple bottom pivot point. I'm going to measure it right off the 200 EMA for now on the 1 minute. They're pumping Marvel still.
To activity today in Marvell, which is up just shy of 4%. And so all this to be said now, Alex, as we think through Marvell, a name that has been a relatively strong performer on the year. I mean, we're up 40%, and we've pulled back now about 2.5% from these 52-week highs that were touched earlier today, but up 137% over the last 52 weeks. I mean, it's
Oh God, I broke my loo. I don't want to listen to them. Oh, my coffee.
Stochastics, another momentum indicator. Moving averages sloped upwards, new all-time highs, even with a little bit of a pullback off them intraday. I looked at a neutral to bullish strategy, giving it a little bit of cushion to the downside, but acknowledging that this has been a force as of late. So selling the put vertical below the market, it's the 110, a 105, put vertical May 1st. Looking for a 3-to-1 risk reward. If you can collect $1.25, that's your max profit, $125 on a 108.75 break even. And then 375 would be that max loss. So Jenny, neutral to bullish, looking for, in this case, this stock just to hold on to some of these gains.
Yeah, and I mean, again, having a nice session today, and also continuing to see, I mean, some more analyst favorability, which is, I mean, hugely encouraging for a name that has outperformed the overall market this year by a pretty wide margin. So we will leave it there for today's FOMO, but coming up next, we'll discuss a major milestone for advanced nuclear energy. Nano Nuclear says it is now the first commercially ready microreactor developer in the U.S. So what that means for its growth plans and space ambitions when NextGen returns.
He's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income.
Triple top.
Schwab is everything you need.
They're 1080 now from 6.
Somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Triple top.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome back to NextGen Investing. Now, Avistock has surged after a sharp short squeeze, catching many of these bearish investors off guard and spilling over into some of these other heavily shorted names, historically speaking. So for more on this recent upswing and momentum, we're joined by Dan King Hall, the host of Morning Movers and Fast Market. Dan, I mean, a name that's quietly been on an absolute tear, and so walk us through what's driving some of this action, no pun intended.
Okay, yeah, Avis shares moving a little bit higher today, and today's move is not something that you'd pay attention to much. We're up
What do you mean?
1% on the day, but it's been a sharp upswing over the past month, and honestly, really within the past few weeks that you've seen this move. On a monthly basis, that stock is up about 170%, a little bit more than that right now. Adding to the momentum today, there have been some revelations that there's a new large stake by Pentwater Capital Management
management. On top of that,
Car.
there's heavy ownership from SRS Investment Management. Pentwater Capital Management disclosing a large stake that's about more than a fifth of it, about 22%. So there's already tight ownership here. SRS owns nearly half of the company, so that means there's fewer shares that are available. So there's some concern around this. Even though you've seen the spike here, it's dangerous for those who may have been shorting this one. About 43% of the float still sold short. We know that that is a challenge in and of itself because you know a trade looks challenging when it's more than 20% there. So in other words, this is a crowded space. You got a lot of investors who are betting against the stock. There's not enough shares to go around. So when everyone tries to get out at once, this can be a difficult one to own. Now, in terms of the Wall Street view, earlier this week you had Deutsche Bank downgrading the stock to a hold. Now, their view is the stock, yes, it could go higher because of squeeze dynamics there, but it's hard to justify the valuation over a 12-month horizon from Deutsche Bank's point of view. Their view is this has been a trading-driven rally recently, not so much about fundamentals, especially when you look at the landscape for rental cars for Avis Budget.
Yeah, and I think that's a good point. Obviously, today seeing a bit of a breather from this momentous rally, but an interesting story to keep on our radar. So appreciate it, Diane King Hall. Now to shift gears, Nano-Nuclear Energy is making headlines after submitting a permit application for its Kronos microreactor. So for more on what this means for energy and the future of nuclear power, we're now joined by Jay Yu, founder, executive chairman, and president of Nano-Nuclear Energy. Jay, so appreciate your time. Thank you so much for joining us today. Now, Nano-Nuclear is making moves, being the first commercial microreactor developer to submit this construction permit application. So walk us through why this milestone was so significant.
Yeah, this is a very critical milestone here because it's thousands of pages of technical work, thousands of hours, engagement with the U.S. regulatory bodies, and it's essentially one of those milestones that you go from a paper reactor to now a real life reactor essentially. So we conditioned this for a 12-month review, meaning that in a year we could be potentially pouring concrete and steel, right? So that is now Nano-Nuclear Kronos MMR coming to life, and that's why it's really important.
And I guess you've kind of described it as that phase being deployment kind of ready. You're just waiting for approvals. You're ready to, put some, shovel to dirt, as they say, I guess. What do you think has differentiated you from maybe your peers within the industry that are struggling to get to that point?
I think, there's a historic, I would say, data points for high gas temperature reactors. And that's what our Kronos micromodular reactor is a high gas temperature reactor. And now you complement that with TRISO fuel, which has been funded by the Department of Energy in the tune of billions of dollars. So you kind of merge the new generation of fuel technology with now historic data points with high gas temperature reactors. So you kind of combine this and you have what the NRC or the Nuclear Regulatory Commission is something that they're comfortable with. This is not novel stuff that they've never seen before. So I think our approach has been to simplify this, to make sure that it's off-the-shelf components to an extent, and also, we're able to actually build this, right, and mass produce this in a modular fashion. We believe our Kronos MMR is the biggest you could build a reactor while keeping it modular, right, in terms of a microreactor. So we're very pleased with the results so far.
Okay, and I do know that you had the first planned deployment, at least, is at the University of Illinois at Urbana-Champaign, which I will say is my alma mater. So I'm very excited to ask this question. I mean, what does that site, though, really represent strategically?
Yeah, it shows that public and private relationship there, and it's many hours by the university and months and years to educate the public, to educate the campus, right? Like, let's visualize this. You have dorm rooms that are going to be across the street from our reactor. So that shows you the safety profile of this reactor, that the actual nuclear engineering department and experts feel that comfortable that the safety measures are met, that there'll be dorm rooms right across the street. So This is a huge moment also because we'll be able to showcase a full-scale Kronos MMR to the world. And what that means is, showcasing that to our commercial partners across the globe.
Speaking of the globe has recently faced a bit more of a feeling of insecurity around the needs for energy and the comfort with how to get that energy. Combine that with tremendous scaling of this AI infrastructure we've spent so much time talking about. What can microreactors like this Kronos that you're describing, your product, do to kind of help with that equation?
Yeah, so the global kind of insecurity around nuclear right now is huge. You have oil that's playing a big part, which is a finite commodity. And then you have new nuclear technologies like our Kronos MMR that's coming online, hopefully by the end of the decade. And it gives you that energy security, right? It gives you that deployable, consistent baseload energy that you could plug in off-grid anywhere in the world. So it gives that X factor, and it gives kind of the globe another option to the energy crisis.
Okay, and safety is also becoming a more central concern when it does come to nuclear. And so how do tri-structural and isotropic fuel and passive helium cooling perhaps ease some of that risk?
Yeah, so this is the next generation of advanced nuclear technology. So with TRISO-fuel, it's basically, coated with tank armor. So it can never, I would say, melt down, right? That's the advanced nuclear technologies. And this is why kind of the nuclear renaissance is happening, because you have all these new technologies coming online and adding to the whole profile of the reactor. So being able to combine the old with the new and essentially reduce that that proliferation issue, reduce the issue with safety. I mean, it's a game changer here.
Okay, speaking of game changers, I imagine one of the nice things about this particular microreactor is that it can be deployed for many use cases. As someone and your teams, I'm sure, are assessing the use cases and looking for those opportunities to get your product to market. From AI data centers to, we hear about space and satellites and things. Where do you think, of all the different places you could see your microreactors from a commercial standpoint coming to life, where do you think that's going to be first?
Well, the nearest term would be all this demand for AI data centers, right? We've been talking to all the big tech companies, and they're talking with us in a very, I would say, detailed and deep discussion, but all of that would play out as it normally would. But I would say the near term would be those commercial agreements or power purchase agreements for our Kronos MMR with these AI data centers. But then, all of the above, what you mentioned, we have space, a tremendous amount of interest from space. We, a couple of months ago, we issued an RFI, and we got dozens of companies that want to partner with Nano to actually work in space, right? So we're actually focused a lot of our time right now also on space, because there's just a tremendous amount of interest from companies. Some of the largest defense companies as well in the world have contacted us. So we have that.
About 1 o'clock.
We have AI data centers. Now, another huge...
We got a rising wedge.
Military, right? We do have an award with AFWorks, which is the Air Force Defense Innovation Unit, which allows us to work with a joint base, the nearest one in DC. So we're looking to assess a feasibility study at that base, because military bases want to be off-grid in case anything happens as well. So having consistent baseload energy still with our Kronos MMR, separating that from the grid is a very important issue for the military as well. So we see military, space, AI data centers, island communities like Southeast Asia. There's a tremendous amount of interest there as well.
And I do know that there's also been an added layer of interest, it feels like, in alternative energy as of late, of course, with some of the geopolitics playing into that. But Really great conversation. So appreciate for all the insight today, JU, founder and executive chairman and president of Nano Nuclear Energy. Now, coming up next, the Masters tees off, and we're talking Callaway golf for under 30 today. And really
this breaks, I'm going to buy a putt.
Needs for the brand and overall sport when we return.
We're not all out of the woods.
Schwab Network delivers real
An old name we used to say here in Missouri, we're not all out of the woods now. Don't be, because I'm very bullish doesn't mean that I'm, we still have uncertainty out there. But this has been the big catalyst. And it's only, we got 2 more weeks we got to go. There's always going to be somebody out there doing something to piss somebody off. All ceasefires just don't end with a ceasefire. There's always some kind of deranged, just trying to throw that last lick in before they have to stop the fight. I was watching a heavyweight championship fight last night, and these 2 guys were really mad at each other. So after the bell ring, they'd be hugging and tightening and punching each other, and the ref would have to really get in there and try to shrug them apart. But the bell rang, the match is supposed to be over, but they're still fighting. Finally, he got knocked out. It was beautiful. Perfect uppercut. Just floored him. I mean, you're fighting swings and right and lefts the whole fight, and then all of a sudden you get him a little bit tired, and he gets a little bit wore out, and then you give him a big old uppercut. That was smart. You could look at that guy. I mean, they were having at it all. The whole fight. The other guy was starting to get tired. He was a bigger, more fit kind of guy, which takes a lot more energy. Than the flabby guy. I mean, theirs out of shape too, but it takes a lot more energy to work them muscles. But the bell would ring and they'd still be fighting. So we're here. We're going to find out. The squeeze is going to happen soon. Either way. SPX squeeze soon. The 68.20 puts at $4.20. And it just jumped just like frickin' that. That's strange. $4.20. See if it comes back to it. We got a double bottom. Boom. Oh, that ain't gonna work. Jim, your inputs. Wonder what kind of ships Iran has. Let's see if they have any battleships. I don't even know if they have any. As of March 26, the Iranian Navy suffered losses. Yeah, they got a ship. $133, $78, $74. There's an Iranian. Here's the deadliest Iran Navy ship. Well, still above the 9. There we go. Drop. In fact, I need to put a price line right here. $5.20. $5.50. Randy, we're at support. Damn. 12:30. The rising wedge is bearish. Especially when there's uncertainty. Sometimes it could be an extension to the upside, but in most cases, when uncertainty is play, rising wedge is bearish. And you got a double bottom here. We triggered the double bottom. I don't know where it went to, but it's in there. There it is. Got shop hit an alert. Oh, my wallet. $100%er, baby. What did I buy the other day? $336. Aspirin. That's it. LED lights. No, I sold them. We're out of support right now. We're at the 100 and the 200 here. If that fails, I'd go puts. We got a little wedge, little descending triangle. Descending, so we'll know any second on the SPY. SPX, same build. Same exact chart. And we bounced off the 200 earlier. So this will be the third touch on a descending triangle. If it starts to go above the 9, the SPY is. Maybe, but I'm going to take a little break, do some paperwork. I was watching that gangster last night with the Son of Sam, and it made me sick. The gangster pissed me off. I told him so. I said, I hope he rots in Blink. That reimburse. Got to remember that. Personal account. Okay, back to work. First I gotta go pee. What happened? There we go, dropping more. Shoot! Jimmy said wait. Ugh. That'd have been 300% puts. Were you in calls, Rufflestinskin? Randy, 3 black crows, tweezer bottom. I don't know why you walked away, not just trade the SPX until this is all cleared up, man. We had a double top on IWM. We had 3 black crows with a tweezer bottom. A bear, a female bear. I actually would have made all my money back. How's that? Because I got in the puts? I guess I'm not understanding. I'm glad you were scared to get in the calls, Randy. Oh. I see. That makes sense. As long as I didn't tell him to sell them. Because I didn't. It's hard sometimes, ain't it? Right now we're bearish because we're under the 200 in both the SPY and SPX. So don't be buying calls here. Don't buy calls until we break the 9. Then that's a squeeze, and you don't know for sure yet. Not until it breaks the 200 on the 1 minute. And then it's just a simple little movement, so you ain't gonna make much money. I'd sit it out. I mean, the chart doesn't look like you need to buy it right now. If you're playing calls, I wouldn't do it. Someone was talking about now the other day. Oh my, Florence. Was it Florence? I'm going to stick with it. 80.65. Wait for 80.65. I think I did chart this for you. I said wait. Now, why did I say 8065? It's lower than the 3-year low. I'm going to raise that up just a little bit. $82.38. Always clean this gym. Yeah, very good. I just, yeah. See if I can find my notes. I don't know if I still got my notes. Oh, shoot. I don't know where my notes are. You telling me? Yeah. Do you need to wait until after the 15th to really get into it?
No, you're okay. If you want to just give me a call back.
Oh, here.
When you've got
No.
a few. Oh, perfect.
No, I couldn't find it. So, I don't know where my notes were. Probably trashed them. Oh, here we go. Here we go. Here we go. Maybe. Yeah, I don't know where they are. You'd have to call them and ask them. I can give you the phone number. It was something about, oh, I can't remember even. One wasn't paid, and I think that was 24 or 25, and there was 2 filings of some on one of those. Yeah. I would call them and just verify. That's fine. That's fine. Yeah. But did you take notes when I gave them to you? Yeah. Yeah. Okay, it's just been on, because I haven't got no taxes back. I don't know if they're holding it back because of that or what. Yeah. And, yeah, I'm not worried about the federal. It's just the state. And then I'll have you have my quarter filings too, coming up. Yeah, and what do you need me to do? Sign a COA? Yeah. Yeah. Yeah, that's no problem. I'll come in there. I'm gonna do my next month here, and I'll be up there in a day or two. And we can sign that then. Okay, I appreciate that. So get that paper where I gotta sign it. Okay, thank you. Bye. Yes, sir. Bye. Okay. Jim, you're losing it. Oh. I can't wait to never work again. Running a business has got a little bit more difficult throughout the years. You're always on the edge. Not always, but every 4 years you are, because you don't know what to expect. I didn't like what went on during Biden. I mean, I had to almost close down. Running a small business wasn't that easy. Now, if I was an illegal immigrant or something, I probably could have got away with it. Got a big old fat business loan for free. But me being a white man, it's a little bit harder. Man, this market's incredible. Just beautiful charting. So we came up and hit the 50 SMA in the 200. And what was that other? Okay, my quarterly taxes. What's a frickin', oh, that's insurance. Business insurance. That's one thing. My business insurance and my bond hasn't hardly gone up at all. I think those are the two things that only didn't go up during the Biden years. I had to get new insurance. It might have went up a little bit, but not much. That was about 3 years ago. Business insurance. Healthcare went up tremendously. If we break the 50, I think we still got a couple hard resistance levels to break. So I'm not really going to be. Power hour coming up soon. I'll be right back. wish I'd know where to put that. Voting card. Net vision. Okay. Well, you can't find it. Can I? Amendment. What's an amendment? Taxes. Amendment. An amendment is a form change to a document. Oh, if I was using a 1040X to correct errors. Amendment is correction made by a physically filed tax returning. What I do, miss tax breaks? Well, that's impossible, not under the Biden regime. Okay. 7 more minutes. Indices rise amid reports of Hamas opening. Israel plans to talk with Lebanon. That I can probably believe. It's just hard to, like Florence said, there's mixed messages. You just can't trust anybody anymore. Got to find a reliable source here. And that's it. This pen's going to the garbage.
Valuations. I mean, we've already gotten some valuations on what OpenAI could be. You mentioned SpaceX earlier. What do you think about those? Do you think those valuations are on point?
Well, I'll tell you what, Nicole. So I was speaking to a very large investor in SpaceX this morning who thinks that even at $2 trillion, it has a lot of room to run, which is crazy because Tesla is worth about $1 billion. But, you know, the crown jewel there is Starlink, of course. And, you know, there's a strong belief among these shareholders in the private market for SpaceX that Starlink is going to change the world, that the big telecoms are going to have to make deals so that they can be a part of this. So I actually do think that these valuations are justified. The only issue, again, is that we've never seen this much stock come to market at the same time. And when things have never been done before, you need to be a little bit careful. One other thing I want to touch on, Nicole, you're sitting there at the New York Stock Exchange. Over there at NASDAQ, they're going to allow SpaceX and presumably these others join the NASDAQ 100 very fast, like in 15 days instead of a year. So that'll help soak up some of the shares because, as you know, the big index funds will be required to buy it once they're added, if that makes sense.
Yeah, makes sense. John Janarone, Editor-in-Chief, IPO Edge, and Evan Schlossman here on set, Principal at Suro Capital. John, Evan, thank you both so very much. And thank you, friends, for being with me. I'm Nicole Petalides every single day here. Opening bell at 9 a.m., 2 o'clock. I join you for the watch list. I'm glad you're with me every single day here on Schwab Network. Keep it right here. Right now, the Dow's up 277. Market on close is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets experts.
So I just had an idea.
Opening bell to the closing bell.
Let me explain this to you this way. CrowdStrike I got coming down 380 for inverse head and shoulders. Now this could be tricky. I just now saw something else. Could be 390. Yeah, this might be 390. This is a prime example. 388.90, 390, 389.
And from Marley Caden, coming to you live from our Chicago headquarters.
From the floor of the New York Stock Exchange, let's take a look at what is coming up on today's show. We will get insights into the tech sector and investor sentiment from the team over at the NASDAQ. The FOMC minutes were released, but all eyes are on what the Fed will do in reaction to the Iran war. So Danielle DiMartino Booth will stop by to analyze the Fed's path forward, and we'll also speak to Dan Dolev from Mizuho to discuss what markets may be missing in the payment and fintech space. But for now, Alex, walk us through what's been on your radar today.
Well, we see a very, I guess, on-theme green day for the start of the Masters Golf Tournament with S&P 500, NASDAQ, Russell, and Dow all firmly up about 0.5%. We're pretty much in line. No tremendous outperformer one way or another. About 60% of the S&P 500 stocks are higher on the day. The NASDAQ breakdown is closer to 50-50 on the session. As we take a look at some of the futures products on our radar, what'll stand out to you is doing this despite a crude oil market that continues to climb its way back towards 100. Now, I should note, it is off session highs on some of the updates that we got, and we'll talk about in just a little bit. The gold market, green as well, up about $17. But given the volatility we've seen there, Sam, I would call that pretty unchanged. Dollar and yields both down again, making at least 2 days in a row. We talked about that yesterday. And then Bitcoin, pulling back off the highs intraday, but all in all, a nice several day streak here for Bitcoin as it's comfortably in that 70,000, 72,000 range now, Sam. So green, the color of the day.
Yeah, and that certainly is the case for chips as well. I've been actually looking at the software via hardware spread, and chips certainly winning amongst the bunch there. So you've got names like NVIDIA, Broadcom, AMD, all higher. You've got some of the memory names which are rallying as well today. Obviously, you've had some news and a price target bump for SanDisk, so that perhaps is helping, while softwares are getting smoked. So it's looking pretty ugly for the IGV today, down over 4.5% right now. So you've got names like Workday, I'm seeing ServiceNow, Adobe, MongoDB, Palantir, CrowdStrike, for instance, are all getting punished today. So the rotation there feels pretty aggressive at this stage. But at a headline level, Alex, the market is still incredibly sensitive, as we know, to the headlines. I mean, we saw that move in oil.
Things are overbought, honey.
After the Israel-Lebanon news, some of the biggest moves, though, perhaps not that obvious. If you take a look at over in the UK gilts market, we did see an 8 basis point move on the 10-year. So obviously this is a very global market, and we're seeing the reaction even outside the US. I was speaking to Liz Ann Saunders this morning, and she says this market has started to look very casino-like. She refers to the short-term money in the market to play that quick narrative change from, say, a social media post, and that's what's creating the whipsaw action in oil and stocks. So she says as long as we maintain that inverse correlation, big moves in commodities are going to lead to big swings in equities. And she says this is unlike anything she has seen in 40 years, guys. So I thought that was a really interesting takeaway, but let's bring Jenny Horn into the conversation from over in Chicago with some of today's top movers. And obviously, at a sort of more micro level, Jenny, we've been taking a look at Tesla. Actually, Alex and I were discussing this one this morning. Still down 30% from the all-time high. Just walk us through the news, the catalyst behind the performance we're seeing today.
Yeah, and I will say that I know Tesla has been a bit mixed this week. I mean, we pulled back this week. It is our second worst performing note of the Max 7, at least so far this year. But with some positive news today that they are developing a smaller and cheaper electric SUV. The vehicle is a new model, not a stripped down version of, say, one of their older models, which is reversing an earlier strategy that they really utilized to simplify various versions of their existing cars. And so they've contracted these suppliers to discuss manufacturing processes as well as component specifications for this new vehicle, according to these reports, signaling again this active development rather than just a conceptual stage at this point. Sources have said the SUV could be modestly smaller than their Model Y, which is about 16 feet in length. Production, though, is expected to start in China, with later plans for production to expand in the US and Europe. But this does follow, of course, the decision to axe that $25,000 vehicle back in 2024 for a broader focus on autonomy. So internally, the new vehicle is designed to support both fully autonomous operations as well as the human driving option, reflecting again some adoption to the current regulatory environment, which of course saw the elimination of that $7,500 tax credit. But Tesla does currently operate a very limited robo-taxi program in Austin, Texas, with human safety monitors, and I do think that that has been a huge driver of its upside. I mean, it's all the bulls really in this name we'll talk about, but a new vehicle could also add another element of refreshing that slate of really vehicles. We know, of course, that they are retiring their S and X. They saw some weakening sales and overall just first quarter deliveries from the Model Y and Model 3. And so I do think that refreshing your slate is important, especially when you think about this year. What else is coming out, and that's Rivian's expected at least, R2, which is more of their baseline affordable model, which could challenge Tesla, frankly. So it seems like they are going back to more of the roots of trying to keep things, relatively cost efficient. But I will say I do want to wait and hear this confirmed from Elon Musk, because we speculate a lot about what will be next for Tesla. It's impossible to frankly guess, but he is a force that typically you don't really want to bet against. But I mean, the argument can be made, this company is, a tech company, an auto company. It does still trade in tandem, though, with its auto-specific news.
Absolutely. I mean, we've been talking about that a lot recently, haven't we? But yeah, interesting headlines today, and it has moved to the upside as we've seen throughout the course of the session. Just sort of sticking with the affordable and sustainable energy type of theme here, Alex. GEV, I mean, we've seen a new all-time high. We've got Susquehanna maintaining a positive rating here and a price target bump. Perhaps no surprises as to why, but just walk us through some of the details here and the price action we're seeing.
Yeah, power of good business to be in these days, Sam. GEV, of course, continues to work its way higher. Nice trend to the upside with the new all-time high today. A lot of this comes down to the Susquehanna note, as you mentioned. The price target raised to 1080 from 820. This is Charles Minervino over at Susquehanna, keeping the positive rating on the shares, as they call it. Updating, and essentially this was just doing some housekeeping ahead of Q1 earnings for some of these alternative energy names. Now, one of the things I think was also overlooked today that may be helping this stock move higher as well, Sam, is that GE Vernova, Westinghouse, and Holtec signed memorandums of understanding with Hungary to support its efforts to build and deploy as many as 10 new U.S. small modular reactor systems, potentially worth up to $20 billion. Now, the White House also emailed a fact sheet on this as well, so supportive of it from Washington, but perhaps something that could be driving some of that price action. 82% of analysts that cover this name said to buy it.
Okay, it makes sense, and expanding their footprint overseas in Europe, it seems. So a nice pop there, 4.5% or so. And Jenny, we've had plenty of headlines hitting the tape today, and yesterday, in fact, in the business of booze, Alex and I had actually been breaking down Constellation Brands' earnings yesterday. I had one guest talking to me today about, or in fact yesterday, about this being somewhat of a best house in the worst street, he sort of described it as. But we've also got some news around Brown-Forman as well. Just walk us through some of the headlines we're looking at today.
Yeah, and I like that. The best house on the worst street is actually a great way, I think, to depict their Constellation's earnings. I mean, they do still have like these standout brands like Modelo, Pacifico, and Victoria. They're gaining market share. Pacifico really being their standout, which also did lead to overall beer revenue up 1%. But beer margins have seen various turbulence, benefiting recently from at least pricing and cost savings, but offset a bit by higher aluminum tariffs, logistics costs, and just overall a global appetite that is shrinking for the same consumption of alcoholic products. And so management warned margins could step down as these one-time benefits fade. Wine and spirits are, just getting decimated with that segment's revenue down 58%. And so I think it's amazing to see this momentum today in shares, given again that, they pulled their 2028 outlook. They cited massive uncertainty, and you look at broader trends in the space, they're not exactly encouraging. So all that to be said, what is clearly a positive and has been read as a positive now for several sessions is Brown-Forman. So in these talks right now, being approached by Sazerac about a potential transaction amid their already ongoing discussions with the French company Pernod Ricard, per the Wall Street Journal. And so shares took off when it was first reported that we could see the two at least merge in terms of this like merger of equals, but both companies have now at least confirmed said talks, but the financials have been very vague and we don't really know many details yet. But Pernod Ricard and Brown-Forman have been exploring a mostly stock-based agreement. Now, there's various opinions on this because Brown-Forman is heavily indexed to the U.S., whereas, I mean, a French name obviously skews more internationally. But if you consider these companies' brands and where they would complement each other, we do have Brown-Forman with Jack Daniel's. That's over half their operating income, so that's basically their most important brand. Where Pernod's Absolute is also their single largest brand by revenue, followed by names like Jameson, Malibu, Kahlua. I just went through some of the ones that I knew, so there's tons of brands within that portfolio. Stagwell, on the other hand, though, Fireball, Buffalo Trace, and Crown Royal. So it'll be interesting to see how this deal ends up shaking out. But
It ain't gonna shake out very well, baby.
To really tie this all together,
Quit pumping it.
roughly 1% annually in the last several years. Well, two years, excuse me, 24 and 25.
Poor growth.
Still below pre-pandemic.
Poor
levels,
growth.
With further contraction now expected this year. And so we've seen beer volumes decline by about 2% between, say,
Poor growth.
2018 to 2025. Wine volumes are down over 22% over that same time frame. And so pivoting to adopt to this environment where we're just seeing global declines. And I know it's a 1 to 2%.
So why would you pump it?
What I'm referring to, but that is massive when you are competing for this what was once a much larger market share when we were seeing just global volumes at elevated
Bring up
levels.
cannabis.
For years now, we've been in a downturn in this entire space.
Yeah, absolutely. I mean, really, the headline story with these brands is that, people aren't drinking as much and they're just trying to figure it out, not to mention some of the higher input prices coming
We're
from
getting stoned more, baby.
with respect to some of the packaging as well. And sort of speaking about commodities, Alex, the big story in this market is obviously oil. It was interesting that after having come off, we did actually reclaim 100 again. We've dipped down now once again, but we continue to see this correlation between the moves in oil and stocks. Even though we've got green across the screen right now, maybe investors taking some comfort in the fact that we're just not looking at triple digits at the moment. But just walk us through some of the headlines and the price action that's really stood out to you.
Yeah, first off, I think it's important to always note that when we're discussing the net change on these commodities, we're going off their settlement price. And the settlement price for crude oil is 2:30 Eastern time thereabouts. So if you go off the equity close yesterday, crude oil was actually closer to $96 a barrel in that May expiration. So still up a healthy $2 a barrel. But as volatile as crude oil has been, Sam, I would almost call that unchanged in these markets, and certainly well off the highs of the session, as you mentioned, well above 100 at some points. Now, there were a few key headlines. The first one, and probably the biggest one, was that Israel is set to hold direct talks with Lebanon, but that they continue to strike Hezbollah. So something to watch there. That was seen as a positive update from Israel, that they did agree, and Axios reported as soon as perhaps next week, having those direct talks with Lebanon, as there is still fighting going on in that region. Also, Trump did say, the president did say that the U.S. military is going to remain in place surrounding and near Iran until this ceasefire is firm. So something to consider on that front. And then Saudi Arabia did give some pretty key details regarding some of the damages that have been done and what that actual loss to capacity and output was. They suggest that it lost approximately 700 barrels per day in throughput. So that perhaps leading to some of the moves off the lows intraday. But all in all, Sam, we're kind of settling in, and I think a kind of mid to low range for the day.
Yeah, it looks like it, but at least we've got this rally in stocks today off the back of actually that relief rally seemingly fizzling out earlier this morning. So a nice little bounce, as you say. A lot of headlines to continue to digest, but we'll let Jenny go now. Thank you so much for joining us today and breaking down all those stories for us this afternoon, Jenny. Coming up, Kevin Davitt stops by from the NASDAQ to discuss the performance of the NASDAQ this year, Q1 earnings, expectations, and the impact of tax season on derivatives.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of
Where's resistance on SPX?
real-time interviews and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab.
We got a Head and Shoulders. We got two of them.
Are you a long-term investor? Our investing webcast
Support.
breaks down different investing styles.
Support is the 200, right about 68.22.18, and resistance oh God. Right now you just hit support, Randy. Has to hold here or we drop more. Resistance is going to be the double top, 682629. $682629. Support 6822.18. Resistance 682629. What is 6826.29? I'd be careful. Yeah, don't take any risk. Just wait until 8:30. I don't know, we're still holding the 200. Now we're not. There's 3 black crows. You're just now getting into the 21. So it's new support is going to be the 63. Gotta be careful. 10-4. If I can't read it, I don't want you to take it. Rob's here! Yep. What is 10-4? Let me see if there's a definition. What is question was asked, what is 10-4? So we're going to see if we can understand it a little bit better.
Hey everyone, welcome back to the channel. I hope you're all doing great. If you're here, it's probably because you love learning new expressions to improve your English skills or just want to sound more natural in conversations. Well, you're in the right place.
Shot with this thingamajiggy here. 10-4, we have an RV ready for takeoff.
Jake Paul, I'm waiting for you.
Helio reptile.
You have a baby frilled dragon.
That's 10-4.
Helioptile, dude, that is awesome. So for context, I have not even
natural resources and state game wardens.
Today, he's on pollution patrol.
We're going down channel.
10-4. Wardens are here in the Houston ship chapter.
10-4, the expression 10-4, also written as 10-4, is a popular phrase in radio communication, especially in CB, Citizens Band, radio, used to acknowledge or confirm a message. It means message received or I understand.
I think that explains it well enough. That is the answer for 10-4. I'll meet you at the back door. Is that a big 10-4? Uh-oh. 10-4. I had to pee, man. I had to pee. You shouldn't be punished in this nation for having to go wee-wee. Okay. Gotta go wee-wee. Two amendments. Missouri tax of revenue. 3 white soldiers. Ah, turn, Brandy. I hit my next resistance. Ah! I'm gonna get me another keyboard. Man, I've wore out probably maybe 10 keyboards since I started trading stocks. I've done probably 2 million charts. What the fuck? What are you missing? The snake, baby. You got the snake, the breakout, pull back, retest, tweezer bottom, boom. I just want people to not get so involved in the rhetoric. Close that out somehow. Sometimes I think it's amusing with fake news anymore. It can really throw your mind off. I think that's what's missing. I'm not scared. There's no 6835s. What do you mean? Huh. Something's wrong on the chart on your appearance then, because mine are in $2 increments. 68.18, 68.20, 68.22, 68.24, 68.26. And on the /ES they're in $10 increments. Oh, this one's in 50. Oh, the time frame might be the time frame. Is it the time frame? Oh, on your option. Yeah, you got something set up wrong there. Those are 5 to 30. 10, there's one. That don't make sense. None of that makes sense. You got 10, then you got 5, and then you got 10, 10, 10, 10. Mine's the same way on toss. 68, 68, 05, 10, 10, 10, 5, 5, 5, 5, 5, 5, 5, 5, 5, 5, 10, 5, 10, 10, 10, 10, 10. These people, man, they're so retail traders, she says, retail traders, they manipulate the market because they're not investors. I love controlling the institutions. I had a big fight with a guy that was in my old room. And I said, one day the retail traders are going to outdo the institutional investors. And this guy traded like he was in 1921. He's an old man. Rest in peace, he's passed away. But I couldn't trade with the guy. I had to leave. He had too big of an ego to come stomping in a room and acting like he owned it. I said, I'm done. I can't take this. And him and I'd get into it about institute. He traded with a CC something. I forgot what it was. It never worked for me. It was like a lagging indicator. CC something. I don't know, CCI or... And he'd get caught. He'd argue with me about retail investors. I told him, you watch. One day, we're going to throw the institutional investors off and they're going to start following our lead. And I only knew a few that actually invested. We just looked at the charts. These guys, they look at the fundamentals and they get caught. They never admit it. They never admit it. That I was wrong. Sorry, I called out the all-time high of a triple top. I wanted to break out to 500 from 4. And then it would tank. Then you hear nothing. You hear crickets. Fundamentals are great. And there comes a time where they just don't work. That this market ain't built like that anymore. It works on a bull market, but you're still going to have ups and downs. But when you're at all-time highs and you break about every resistance and you're up 300 or 400% in 1 year, you know, you got to look at that yearly. Well, we're up 250% in a year. That's when I started trading. 10%, 15% in a year was a real good move. Now all of a sudden, we got these 300, 400, 500, 600% gains in a year, and you got to adjust. I mean, I'm going because I've been here before and I watched it every day. and we printed so much money, so much liquidity, that it put us in debt printing. Distribution of wealth. It comes down to that. You can't print your way out of trouble. It just makes things worse. And we print so much. There's going to be, eventually, most wars start over money, oil. Look at your history books. The fun thing about this, we've had 3 weeks of selling, 5, 6. Well, actually on here, on the 20-day chart, we had 1, 2, 3 weeks of selling, and we're already back at the top and broke at resistance in 2 weeks. I've got people in other rooms asking me about the snake, how to trade it, because they've seen my success rate trading it. And they're trying to learn it on their own. See, like right here, I had a little pull back to a double top. Snake breakout, pull back into an ascending triangle. The ascending triangle is very bullish. So we had the snake breakout, pull back to the 50, 63, created an ascending triangle, and that thing's bullish. Head and shoulders with an extended right shoulder and an inverse head and shoulders down at the bottom. Big gap. So the gap is your major support now. 67.50, 26. That's your major support. Got 8 more minutes. I've got a major decision to make here next couple weeks. If I'm going to sign another lease for this apartment. I would sign another lease if I knew I was going to probably have a little bit of money coming out of the room. Or I might end up moving up on my property. I won't be able to get online until later, if I do at all. So I got to figure that out. I hate making life changes. It used to be simple. Every 10 years. But this has gone on for 22. I can't believe in Missouri, the rent gone up so much. We were one of the least expensive places to live in the country. Now that people are moving out of California and Chicago, St. Louis, moving down here for cheaper rent, it's actually raised it. And then Biden, housing costs just flew. So I've had times that are a whole lot worse than what they are right now. Under Biden, my rent went up $300. Biggest increase I can remember in my lifetime under any president. Went up 30%, 35%. George, Texas Pacific down 20% this month. TPL. Put that on the watch list. I can't believe how TPL, TRL, it's TPL. George. So what do I do? Okay, TPL, something about oil trim gains. TPL announces a passing of Murray Stahl. It's got gas. So you got a nice website. TPL passing on Murray Stahl. So who's this? Is that the CEO? That's why I pulled back. Board of Directors announced today that a member of the TPL's board had passed away. He had been the biggest owner of the stock. So that's the reason why it pulled back. Yeah. God.
memory names. So SanDisk, Micron continue to outperform. That's really dragging up that index, which is giving us some positivity as well. So overall, if you're kind of looking at it going into the close, I'm looking at around.
All right. Well, really not a bad day. I know I'm in a room with a lot of different opinions, mostly, but we have one opinion that we do like, and that's stocks. Some of us think different on politics, on what we eat. I was in the student government in college, and I thought about being a politician. That's when I was slick, good looking. Now I'm old and shabby. But I really don't want to get in politics. I mean, I could have probably made a ton of money. A ton of money. You know, 10 million in 4 years probably. That's the way it averages out. But I always find politics to be controversial. I've lost 3 of my closest best friends during Obama. All of a sudden they become race baiters. Like if I said, you know, Obama, like one time I said, if Obama cared so much about the environment, he wouldn't be flying in these jets every other day for years. And one of my liberal friends just got pissed off and called me a racist. It had nothing to do with race. It had to do with the environment. So I got into, I said, screw you. You still living with your mommy? You got a job yet? And then, yeah, you know, and then I lost 2 or 3 others. Biden, I haven't lost too many because I'm still, but that was a period where I just decided, man, I don't know if I want to be in this party anymore. Because that's not me. I was in the IRS the other day, and we were talking about holidays. I said they ought to give Easter and change Juneteenth for Easter. You're a racist. I said we already got Martin Luther King Day. You're a racist. They're all fired up, all them liberals are. Out protesting and riots. And I think I read a thing where Trump cured cancer and liberals were protesting. I want my cancer back. I want my cancer back. So it's just not me. I don't want to be like that kind of person. I walked with Martin Luther King in a real original parade when I was a little kid, and I walked in 18 of them after that. And I stopped walking them because I just got tired of the race baiting. It wasn't about race baiting when I walked in them for 18 years. So politics. That's why I stopped listening. That's why I got rid of my TV. They took off cops. Now I can go on YouTube and find it. And they try to show more white people than black this time, even on YouTube. So everything's got like that. I just didn't look at it like that. I looked at criminals as criminals. So that's that. I just try to keep politics out of my trading. So much misinformation out there, and it's hard to find the truth. Well, I'm going to get out of here. I got to get all my paperwork ready to give my accountant so I can pay my taxes. I don't like paying taxes. I like spreading my wealth. I was at a grocery store this morning. Guy, old man wearing a cowboy hat. And I got to talking. I said, he bought him a potato and some strawberries. And I said, what are you going to do with that potato? He just had one. He said he was going to eat it. I said, sir, do you mind if I pay for that potato? No strawberries? And he looked at me and smiled real big. He said, no, you don't have to do that, sir. And then when he got ready to leave the line, I said, you sure? It's on me. And he started to walk off and leave, and he turned around and said, smiled at me and said, thank you. I said, nobody's ever tried to do that to me before. Last year I bought a roof for somebody. I'm not going to mention the race because they were a different race. They needed a roof. I just walked in the neighborhood one day and seen a guy sitting out in front of his old beaten up house. I said, sir, how would you like to have a new roof? I got $5,000. I'll get her done. He laughing at me and stuff. I said, I'm serious. So to me, liberals are kind of losing it. They don't give, they take. I'll get out of here, but I want to keep, I when I'm trading, I don't try to think about this and that. I mean, it helps. It gets you in the right direction. And we found the bottom, as far as I know, for now, until anything goes wrong. And I'm going to get my paperwork ready. But days are going to come, though, that I ain't going to be around anymore. My body's telling me that. I mean, I better get up and do things, and I exercise, and I work still, but if I quit working, I'll probably just help the family out for a while. So we'll catch you later and see you tomorrow. I wish everybody a great day and a great night's sleep. I've been sleeping, I slept 9.5 hours yesterday because I got that car fixed. I just hope I can get some of this anxiety out of me. Thanks all. YouTubers. Divots. Yep, the dealership fixed the car.
We'll see you later, YouTubers.